Psalm chapter 23, verse 4. Even though I walk through the valley of the shadow of death, I will fear no evil, for you are with me. Your rod and your staff, they comfort me. I will fear no evil, for you are with me. Your rod and your staff, they comfort me. I will fear no evil, for you are with me. Your rod and your staff, they comfort me. They comfort me. Matthew chapter 11, verses 28 to 30. Come to me, all who labor and are heavy laden, and I will give you rest. Take my yoke upon you, and learn from me, for I am gentle and lowly in heart, and you will find rest for your souls. For my yoke is easy, and my burden is light. Psalm chapter 119, verse 76. Let your steadfast love comfort me, according to your promise to your servant. Psalm chapter 73, verse 26. My flesh and my heart may fail, but God is the strength of my heart and my portion forever.
Good morning, everybody. Hope you guys are doing well. Back at it with another one, right? So, let me check some stuff. How's your guys' weekend? Let me know. Let me know in the chat. Hope you guys have been doing well. Hope you had a good week last week. It was pretty interesting, that's for sure. Just go make sure we got everything.
If your phone can't help you find
Jesus. These ads are crazy. So let me check something real quick. All right. So yeah, how's your guys' weekend? Let me know in the chat. How's everybody doing? Hope everyone's doing well. We have a lot to discuss today, that's for sure. We got a new quarter coming, so as we always do every month, we're going to go over the monthly perspective. We're going to go over our, I'll probably get kind of detailed into COT today. I've been getting a good amount of messages from a lot of you guys, and you guys want that, right? You want to dig a little bit into that, so I think we'll dig into that today. And seasonality, we'll go over that again. We did, I think last week, if I'm not mistaken, but we'll do it again today. And yeah, we'll look at DXY, bonds, yields, indices, currencies, so on and so forth, right? So yeah, and just an early reminder, if you guys get value from the content I provide, definitely don't forget to like the video, subscribe to the channel. Helps the channel out, helps me grow and get in front of more people so we have a bigger impact. So yeah, that's much appreciated. But yeah, so as always, we're going to start here. After we look at this real quick. So next week we got NFP. So those of you that don't know, NFP protocol, the way that we operate, we cut our risk by half. Most of the trading is done, as ICT says, on Monday and Tuesday. Going into NFP, you get one trade, one attempt, and it has to be done, if you do it at all, at least 30 minutes to an hour after the news release comes out. And there's something at 5:30 on Friday for NFP, and then there's one at 7. So when I see this, the first move is probably going to be fake. Okay, write that down if you haven't, right? If you're not familiar with how to behave around NFP. It's a 2-stage event. FOMC is very similar. CPI is a 1-stage event, like it just blasts through wherever the hell it's going to go. So, keeping in mind those characteristics early on, it's very important. Just as like a preparation. And if you go back and study NFP, FOMC, CPI, you could see that this manifests pretty much every time. It almost never goes against that way of delivery. Sometimes it does, rarely. But for the most part, it does the 2-stage event, right, for FOMC and NFP. And again, CPI is one-sided. And a lot of times CPI punches into a higher time frame level, either going into CPI or right at CPI, and then that just explodes price one-sided towards a higher time frame weekly or monthly objective. All right, some type of PD array. But yeah, so again, the start of the week, right, we're going to basically always think of power 3, always, no matter what. If the first 2 to 3 days are very slow, we're going to have to obviously pull back a little bit, because it may do majority of the work. If that's the case, it may do majority of the work going into the later days within the week. And of course, it's the first day or first days of the month in October. Something I want to point out to you guys too that comes to seasonality. Let's pull this up real quick. Okay. So when we look at, let me make this bigger. So seasonally, what can you guys tell me, those of you that have been here for a while, or even if you're new and know about seasonality a little bit, what can you tell me from this chart? What can the assumption potentially be, like condition-wise, right? What could it be, and why, right? What tells you the opinion you have by looking at this chart based on what we've talked about? Just let me know in the chat. I'm not sure how long the lag is, but I'll give you guys a couple seconds. The seasonal chart shows you open, high, low, close. If you can elaborate a little more on that, that'd be great. But then just based on what this data shows us, what do you guys remember we've talked about with seasonality and how to use it? Monthly power 3, okay. We could think of that without looking at seasonality though. That's kind of just like when you look at the monthly. What specifically does this seasonality chart show you? Like when you look at the data here and you're looking and seeing it, what does it show you? I guess I could see where you are talking about power 3, but I'm looking for a couple different answers. You guys remember? I'll give you guys a second to think about it. Just want to see where you guys are at for sure. So yeah, let me know in the chat, right? So whatever's on the top of your mind. All right, well, throw a 1 in the chat if you have no idea. Right. Bullish tendency. Zach, absolutely. What else? Let's see if there's anything else. Next 3 months bullish. Okay. That's obviously, that's what it looks like. So why could that be trusted though when we're looking at the chart? Because just because you see one of the lines go up, or you just see it gradually going higher, it could show a tendency. But what else related to the 3 lines tells us that bullish tendency is pretty significant going into the rest of the year? Basically, the fourth quarter being strong bullish. What can you pull from the chart that helps you identify that? Rate cuts, I mean, that's a good thing, but that doesn't have to do with the seasonal chart. That's an external factor. It kind of goes hand in hand, though. You could see that overlap. But what about this chart can help you solidify that perspective? Again, it's okay if you guys don't know. I just want to know where you're at. We've talked about this a lot, so it's good that I'm going to go over it. Seems like there's not a full understanding of how to read this. That's the different years overlap. Yeah. So let's try to make it more specific. So with the lines, what are all the lines doing? Are they mixed up? Are they all going in one direction? Are they, is it just like one going higher or lower? Or what about the characteristic of the seasonal chart specifically is telling us that the tendency could be bullish? What's the relationship between those 3 lines, right? Like what does what is the characteristic showing you? Because if one line is going higher, like anybody could look at it and see that one of the lines is going higher or lower. But what specifically, when you're looking at seasonality, you want to make sure that you're paying attention to the relationship all 3 of them have to one another at any particular time. I've given a drill a couple times this year, multiple times over the last 3.5 years to my private group, where you got to observe each month individually, which I give you guys seasonal charts in the private group to be able to make that portfolio of seasonal charts for each month. And you want to look at the seasonal highs and lows. Where are the significant highs and lows? Like this one, like this one, like this one. Where's the seasonal highs? This one. Sometimes, maybe this one, right? Depending on what's happening in the chart. And then this one, right? And then obviously, we got the low that forms that leads us to the buy side. So that's some stuff you got to observe. And then, of course, you got to observe at different times of the year how together they are. Are they moving in the same direction, higher, lower, or consolidated? Or are they just sporadic? This is a very important element because the people that don't understand this say that seasonality doesn't matter. It's the same type of situation with the people that say COT doesn't matter. It's because they don't know how to use it. So of course it doesn't matter. Of course they can't use it. Of course it's not a tool that they're going to see become effective in their trading because they don't know how to use it. It's just a bunch of squiggly lines. They just make an assumption. Oh, well, it's going down here, right? One line is going down, so it must be bearish tendency, and then it goes higher, and then or consolidates, and they sit there and think, oh, it doesn't work. But no, you've just been taught either by an idiot or you just haven't seen or tried to practice the right information, right? Or the right application, I should say, right? So if you guys don't remember me talking about this, you want to make sure that you take some time right now. Don't wait till later because you'll probably ignore it. But take a piece of paper or your journal, whatever you journal in, and write it down in terms of the process on how you study and use seasonality. Right? Because what I just basically mentioned is how you do it. It's how you use it. And it's over time, obviously, it'll become more important. Because me saying this right now, and then you go into the chart and then, you don't really see it agreeing. I mean, this is a long-term view. For the last almost 10 straight months, I've been able to call bias and narrative on a weekly, monthly basis. At this point, too, a quarterly basis. That doesn't come from me just looking at the technical chart. That comes from, I mean, it's a big part of it, obviously, and my understanding of how price uses PD arrays and bias and narrative and all that stuff I talk about regularly. But things on the back end like COT, seasonality, how certain news events impact the economy, like rate cuts, for example, which we talked about for a couple months straight. All that stuff puts you in a different level, puts you in a different bracket of effectiveness and understanding, So this is why this stuff's so important. And, you want to have as much as you possibly can on the back end, supporting whatever it is you're trying to see in price before you walk forward. And then you walk forward, having all this stuff behind you. Every other asset, you have a better understanding of why a certain asset like the S&P, for example, should be bullish or should be bearish or should be consolidated. Right? So if you see that, or one of those characteristics on the seasonal chart, and then you take that to the technical chart, and then you do our overall analysis, bonds and yields and all the other stuff that we do, you have a greater appreciation and trust behind why price should do one thing or another. Okay? Some stuff you'll use, obviously, some stuff you won't, but things like this, it doesn't take a lot to study it, and it takes patience to watch it unfold. But ICT, those of you that listen closely to the things that he says, he has literally called on numerous occasions seasonality a treasure map. That's a big statement for a tool. So you can imagine that if you're listening to a mentor or someone talk about something like that, that you put a lot of stock in their opinion, you're going to obviously want to try to investigate, right? And I hope that this is a reminder for those of you that have kind of put seasonality to the side or just have felt like it's not useful because maybe you're a day trader, it's the wrong mindset, right? But hopefully this is a good reminder, and hopefully I just explain this in an easy enough way for you guys to walk forward with it, right? It's very important, because if you're trying to trust a bias and narrative too, and you're getting it wrong or something's going on, right, and you're not able to get your footing, you're going to be in a mode of potentially trying to flip-flop. This is another way that you can solidify yourself in one direction. If price is bullish on the weekly, monthly chart, but it's going against you, if seasonality is aggressively bullish and it just seems like the retracement is to like a order block or a fair value gap on the monthly or the weekly, you're going to be able to hold on to that bullish narrative because you have a lot of supporting factors. And the trust in that process, in these tools, will come from things happening over time. But if you don't ever study it, if you don't ever track it, you're never going to be able to use it. You'll never be able to see how helpful it is. So this is something that, I look at every month. Okay, I don't look at it every day because I get a feel for what the month has the tendency to do from the last, 5, 15, and 27 to 30 years. You see a lot of commonalities with it. And then again, to go study this, just to, for completeness sake, you want to take this chart, note all the characteristics you see, all the highs that led to big moves, all the lows that led to big moves, when that happened, seasonally, what quarter it happened in. All these lines are different quarters. Okay, first quarter starts here, second quarter, third quarter, fourth quarter. Right? So you can start to make a map, right? Like a reference, like yearly, monthly, quarterly, for the tendencies that it generally has. And my brother said, I'm Reckless in the chat's my brother. He said that open, high, low, and close is something that he's reminded of when he looked at this chart. There's some truth to that. That's why I didn't say it was wrong. It just wasn't what I was looking for, right? But there is some truth, right? You start a quarter. If it's a bullish tendency and it's going to be a bullish quarter, drop down below at the start of the quarter, rally up, and then comes off the high and closes into this, right? And then the what is that? first, second, third quarter, opens, drops down in some capacity early on, rises up, right? And then it's in the summer months as well, right? So you got to take this with a grain of salt at times. It depends on what the condition is technically in the chart for, like in certain scenarios. Like the summer months are hit and miss. It could be strong bullish depending on what's happening in the world. It could be consolidated, which is what the seasonality shows. And if you go back test the last 10 years, you'll see very common scenarios, right? Like which mode of operations, bullish, bearish, or consolidation, has the market done, in this case the S&P, over the last 10 years at these certain times of the year, right? And you just take notes on those things. And then, you could look at this one too, right? Early drop. Isn't that what we're kind of seeing right now in the indices? Didn't we just drop aggressively as we went into the new quarter? Right? Like you could just see visually just off this one example with what you guys have experienced going into this fourth quarter. Right? Strong drop. Haven't we seen an intermediate term high form that dropped aggressively into a wick? Right? Didn't we map out all the reasons why and navigated it? And now you can kind of see that correlating like a treasure map here in the seasonality chart. And you can see the bullish tendency is strong. How do you know it's strong? Let me know in the chat. How do we know that there's a strong bullish tendency going into this new quarter? How do we know? What can you pull from this chart? I'm looking for one specific answer. What tells you from this data that it's got a strong seasonal tendency to be bullish? And then after I get that answer, we'll move on. So what characteristic in the seasonality data here that we're looking at tells us that there's a very strong bullish tendency, right? Because clearly it looks like it's bullish, right? But what about this chart? What is the data showing us with the lines? Like, what is it telling us, right? How can we confirm by looking at this chart that there is a bullish tendency? Based on the data, right? It's a characteristic that's showing right now in the data. That it looks like there's a stop run. Okay, so in terms of the lines, right? That could be something, but that's not exactly what I'm looking for. It's something that I pretty much mentioned a minute ago about the lines specifically, right? So what about these lines, when you look at the chart, shows us that there's likely a strong bullish tendency? Is it just because one of the lines are going higher, right? Is it just because one of these specific lines is going higher? Or is it something else? And again, it's not going to look exactly like it is, right, in this. So yeah, my brother just gave the right answer. They're all in strong correlation. When you go back and look at these different times of the year using the seasonality chart as you're going to do your studies, the times in price where all three of the lines agree in one direction or the other shows you that that's a strong tendency seasonally for price to go in that direction. Like this, right? Strong bullish tendency if it doesn't consolidate in the summer months. Strong consolidation sentiment going into the summer months, right? This is why ICT says that the summer is a harder time to trade, This is why consistently the summer is harder to trade. Seasonally, it shows that they don't really agree. It's really sideways. Obviously you see the shorter, or you see some of the lines obviously favoring going down. And sometimes it will do that. If it's a bearish market overall going into the summer, maybe that will continue. But you do have to reference what's showing here characteristic wise with all three of the lines, what time of year it is, and then you have to always compare it to what price is doing in the actual chart. It's not a be all end all, obviously, but this is one of those really, really, really strong tools that you'll discover is highly effective once you do back testing. Because again, I could talk about this till I'm blue in the face. I could point out all these different characteristics, but if you don't take the process that I've shared, that ICT's also shared, right? He shared it a couple times as well. And then you go and study it yourself and then let time pass while keeping these things in mind, while being patient, letting this happen. You won't see it. So you'll go into the market and you just won't have this extra expectation that's highly accurate. It's highly consistent because the markets are what? They're controlled, right? So there's similarities. It may not always look the same. Sometimes we'll be in a bearish market, right? And it's got a bullish tendency, right? Bullish seasonal tendency. What do you do in that case, in that scenario? Well, if we're in an overall bullish, let's say we're in a bullish market and there's a strong bearish seasonal tendency, like this, for example, going into the fourth quarter. That can help you gauge when a retracement could potentially happen. You know how I think ICT was so confident that an intermediate term high would form and price would reject at that high? He's using the timing from seasonality. He's done this numerous times, right? Like I've seen him do it so often in his charter content. I've seen him do it obviously over the years on YouTube, kind of hint at it. Obviously some of the stuff kind of blows past people because the awareness isn't on certain topics when he talks about it or when he's throwing these little breadcrumbs. But when you're aware of it and you're able to, or you're aware of certain things and you go and do the studies, like I'm telling you about this, you start to understand why he's so aggressively behind particular directions in price. Obviously, this isn't all he uses, right? That he has so many things. But this is one of those things that's highly accurate. And he talks about the early months, like in May, right? He has a slogan, sell in May, go away. Why? Why does he say that? Because May going into June is generally aggressively bearish. Does it mean overwhelmingly? Does it mean the trend overall is going to stay bearish? No. There's just a strong seasonal tendency, which is shown here. April, May, June. Strong seasonal tendency where all three of them agree the price is going to drop. So he has an expectation because of back-end information that is highly consistent. Every year you'll see this stuff play out. If you do the studies and do what I'm telling you and have been telling you guys, you will see these things. But you obviously can't appreciate it if you don't go do the study. And he talks about so many things and there's so much stuff to study. Sometimes certain things go over people's head, right? It went over mine for a long time until I went and did this exact process I'm telling you about. And I'm spending time on this. I could be moving on, but I'm spending a lot of time on this because it seems that it's kind of, hasn't stuck. And, I've tried to mention it a good amount. I mention it a lot to my private group, so I'm sure they're probably using it a lot. But, it's just one of those things that I really, really enjoy using. And I get questions all the time. How are you so accurate? I'm listening to what you're saying and I still can't get it. And, long term, I really can't get it. Like overall, like where the market's headed, it's hard to gain clarity on that. A lot of that has to do with experience, obviously. It could be a multitude of other factors. But most of the time, those same students that ask me that stuff have like a lot of the things that I talk about put to the side. And I'm like, how are you going to expect to get similar clarity if you're not at least trying to do most of the things that I'm sharing, most of the things that ICT talks about. Like, simply as sticking to the higher time frame also. A lot of people don't like it. They don't like the daily, weekly, monthly, quarterly chart. They don't like it. It's too long. That's what they say. But if they would have used it, clarity would have been a little bit more easily achieved, and will be easier to achieve. So again, I want you guys, I set this as a drill actually a couple weeks ago on YouTube. I said to do the seasonality analysis, take the last 10 years. I give you guys the charts so you don't have to go pay for it. You have to pay for this data. I pay for it and get it and bring it to you guys for free. Right? And so you take the last 10 years of the data, observe highs and lows, identify areas in price where all three of the lines agree, right? You could get a rough annotation of what the characteristics are just from looking at it, right? Keeping in mind the things that I've just talked about. And then you take that information and you go to the real chart and study the last 10 years, right? And you have to get a rolling, continuous study of this. Otherwise, you're not going to appreciate it. There's a reason that I show this every month, because I do this analysis and note this stuff every month. I refer back to it mid-month. Same with COT, right? I use that in a very similar way. These are long-term trend identifiers, right? And in order for me or anybody else to be accurate, at least from my perspective, on the higher time frame for so long, big, large amounts of time, it takes more than technical understanding, right? You have to be able to understand these certain tools because they help you get a better grasp. It also helps you validate higher time frame PD arrays if it aligns with seasonality. I have a checklist that I give to my private group students, and part of that has to do with seasonality and COT agreeing with your idea, right? When it comes to higher time frame. Obviously, it's a little bit less important when you're on the lower time frame in some ways, because day to day, the data from the last 5, 15, and 27 years is going to not really be overwhelmingly helpful. In the grand scheme of things, from the weekly and daily and monthly chart, obviously it's going to be helpful, right? Because seasonally, I could say this, but you get more edification from it when you go in and do the study. So I'm encouraging you guys to go and do that study. Hopefully I was able to give that process a little bit easy enough for you to take it and run with it. But again, it's just one of those things. Every month you go into, you should have an expectation, right? Like a rough expectation, right? It shouldn't just be, I don't know, we're going to see what happens. No, there's things that you can do like this, tools you can use like this, that can help you have an expectation, a reasonably high probability expectation. And then, of course, if things change, technically, right? If you look at the chart and it doesn't agree, you could use that information too, right? If we're, like I said, if we're bullish and we see seasonality showing a bearish turnaround where all three of them agree in a high forms from the last 5, 15, and 27 years, it's probably going to trigger in some type of retracement, right? Even if it's a short, shallow retracement. At that time of the year, you can use it to time it, just like how ICT has timed this one with the NASDAQ and the S&P and just the indices in general. I mean, this is probably one of the, on numerous occasions, I've pointed this type of stuff out from my own examples, showing how this just, for whatever reason, agrees and it supports it, like in terms of the price action today and just overall. And then you glance at the seasonality and it aligns. It's not random. This fact that this is having a heavy decline, which we've seen in the NASDAQ, to start the fourth quarter, the timing alone is pretty eye-opening, right? For the big, huge decline that happened, right? There's a high and then a drop, strong drop that leads to a low that ends up pushing price for the Christmas rally, right? So seasonality being extremely bullish towards the end of the year. Part of that has to do with commerce and whatnot as well. Lots of money is flowing in and out of the system because people are just buying things, holidays and all that. So that plays a factor as well. right? So again, I hope this really stuck this time. And those of you that watch this video probably never heard this before. If you're new to my channel, this is not an overwhelmingly advanced topic. You guys get the resources from me for free, which I pay for. So you have like the best of the best, most recent information when it comes to seasonality. And this is a resource ICT talked about, right? I think the company's named MRCI, I think. MRCI. I think it's like $50 a month or something like that. But yeah, it's the most effective and accurate, reliable seasonality analysis tools that are on the face of the earth. And $50 a month to get some invaluable insight that's generally putting you on the right side of the market, obviously coupled with the other things that we do. I mean, I think that's a pretty small investment. But again, even if it's too much, maybe some of you guys don't have the money for it. That's why I get it and I share it to you guys, so you can have access to premium tools like this. And I teach you guys how to use it. ICT's talked about how to use it, why it's important. And of course, those that aren't serious, those that just want signals and for me to be on the 1 minute chart telling you where to buy and sell, obviously this is probably going to be useless and, not going to listen to it. But hey, you don't go to college and then try to get like a tech job to do the bare minimum and expect $100,000 a year. I don't know why a lot of people have that mindset towards trading as if that's reality, but that's why that's why their results suck, and that's why they can't do half the things that we share live publicly on a weekly, daily, monthly basis. And at this point, yearly, every year basis. There's a difference. There's a dividing line when it comes to certain results that are good versus those that just won't do anything with this industry, And it comes down to effort. It comes down to how serious you take this, how much sacrifice you're willing to make, the tools that you allow yourself to use, how much you listen, how disciplined you are, right? All these things, because when you think about excellence versus mediocre, I'm sure that we can all agree there's a massive difference. There's a difference between Steph Curry, right, on the Warriors, crushing it, hitting 3-pointers like it's nothing every single night, winning championships, versus, someone that plays like once a week, twice a week, just doesn't really take it serious, but they have a goal of being in the NBA. There's a difference. That's why Steph Curry is where he's at, and that's why that person is where they're at. So it's the same with trading. There's a reason that people make hundreds of thousands of dollars, quit their job, and have a crazy, dreamlike life, versus those that continuously struggle, fail, and just half-ass the effort. Just give me a signal, guy, right? Like, there's a difference. And, we always got to keep that in mind and remember that. Okay? Again, this isn't a be-all, end-all. It's not like this is going to change everything, this one thing. It's just a reminder, because, it's very easy to get distracted. And sometimes we just need someone to be there to, give us a nudge, right? Because this is hard. This is the hardest industry you'll ever try to be involved in to be successful. There's a reason 90% of people fail. It's because the 5% put the effort of Steph Curry, while the 90% half-ass it like Joe Schmo who plays basketball twice a week, but wants to be in the NBA, and then calls it unfair because he sucks, right? It's just, there's the difference. I'm sure most of you guys understand that. Probably all of you guys that are on this call do understand that. But those that, may have been not giving the effort that they should be giving while having these lofty goals and wondering why it's not working out. Maybe they've been trading for a year, 2, 3, 4, 10, and they just haven't gotten the results. But deep down they know they weren't putting the effort. Hopefully this is a nudge to get you to put that fire under your ass and make you start doing things you're supposed to do. I lay out a whole process here on YouTube. And in my private group, obviously, there's a ton of accountability, more live streams, more information, support. But I have students like Tony that have proven that just this YouTube channel can really do wonders for you in your understanding. And I'm humbled and grateful for that, right? But again, hopefully this is just a reminder. Hopefully this was understood. So before we move on, I want to make sure, if I was to turn this off and you were to go and do a study on seasonality, do you guys understand the process I've just laid out for you? You can just throw a 1 in the chat. So it is, and it's only the beginning. Yep. Yeah, Tony, absolutely. Absolutely. All right. For sure. And honestly, if you guys want some accountability, start sending me your markups. Send me the studies you do. When I tell you to do something and you want that support, send me the studies. I'm more than happy to look at things, help critique, help add to, or tell you you're on the right track. Whatever the case may be. That's why I'm public. It's to help people. It's not for my own stuff. As great as it will be if I can grow this channel, because the impact will be amazing. As great as that would be, I'm not here for that type of image-based goal for social media. Once I feel I've helped enough people, which I still have to determine that in my own mind, but once I feel I've helped people enough, I'm going to have a private life. And I'll get off social media, as most successful traders who actually do well decide to do. But I have a mission to help a lot of people, because I have people that help me, and I want to pass that blessing forward because they told me that's something I should be doing as well. And that's something God would probably want too. So I want to be able to do something that can have an impact. So yeah, I'm more than happy to help you guys out. So send things through, any questions and all that. Of course, keep hopping onto the YouTube channel. Keep hopping onto the live calls I do on a daily basis. Those of you that are in the private group, I know some of you guys are here right now. So yeah, help me help you. I want to see you guys succeed. Right? But yeah, so again, seasonality is showing bullishness here. Why? Because all three of the lines are agreeing. There's a significant swing low here going into October. Decline going into the fourth quarter. We could see that on the NASDAQ from this previous week. That's what's happened. And so we'll see what happens at the lows we're at. On the weekly chart, we'll talk about it later, but I don't think we're overwhelmingly turning sentiment yet. We'll obviously see what happens. But yeah. Wait, whoops. See, then we look at NASDAQ. Very similar thing. All right, if we go switch to the US dollar, going into October, big decline, interest. Right, dollar is more of a messy seasonal tendency. Looking at it, it looks kind of crazy. But nonetheless, all three, when they agree, compare and contrast to the asset you trade. A low that forms after it declines and rallies up aggressively. A high that forms after it rallies, it declines. Right, so bearish. Overall for the rest of the year for the most part. Some little sporadic moves here, but for the most part, if bullish seasonal tendency is going to take place, and we're going to see bullishness as we generally do, which is why they call it a Christmas rally, we will potentially see things continue to go higher. September is sometimes a shaky month. Sometimes, if you look back at some of the data from previous years, there's a bullish seasonal tendency, obviously, but you want to make sure you're cautious. It's the first month of the quarter, especially the first week going into NFP, FOMC. So, you want to make sure you're always cautious about September for, going into next year. This year kind of showed something similar. September was a bit shaky, but for the most part, we were still able to manage. So, and then again, October is pretty amazing, right? So yeah, we'll see how it goes. October, November, and December obviously can be the cap of the yearly range, the yearly power 3. So you want to make sure you're keeping that in mind. But because of Christmas and all that, we may see some dynamic price delivery all the way up till December 30th, right? The end or 31st, or 30th. Yeah, December 30th, right? We'll see. Because December starts the first quarter of next year, right? So December's the first month in the first quarter, right? So it may, for the quarterly power 3, it may cause a problem. But, we'll deal with that bridge when we get there, okay? But yeah, so hopefully you guys have a good idea of what seasonality is telling us. So we'll take that information and we'll keep that in mind, right? So, and then we'll look at this, right? This is the COT data. We've got a drop in open interest. The main thing we're looking for here with COT, it's generally going to be based on, if I could find it. Let me see where the hell it's at. So generally, when you're looking at COT, right, and oh my goodness, we're basically observing in the COT when we look at it. First of all, we're marking off the last 6 months, the extreme high and the extreme low based on this data here. You then, once you mark that off, you take a fib, you break that down into quadrants. Okay, so the high and the low has quadrants. The upper quadrant above the 0 line is generally bullish, right? It supports bullishness. I mean, that's been pretty clear as it got above it. We've been in a buy program the whole entire time, right? This middle line in here, though, something that most people don't talk about because people don't know what the hell they're talking about. When you're using the COT data the way that ICT teaches, which is what we're looking at here, and you break that down into a quadrant like this, if we're above the 50% level, given the last 6 months range, that's generally going to favor potential buy-side delivery. Obviously, you want to make sure you're paying attention to the relationship the open interest has with the COT. The signature you want to look for is this, right? If it's got a strong rise in open interest like this or like this, and you can couple that with a drop, a strong drop like this, right? Or even like this in the COT. If we're below the 0 line here from the last 6 months, that's a heavy bearish indication, right? That's an offloading of buy positions, especially if price is rallying when that's showing up. So that'll generally lead to a potential reversal. If seasonality shows bearishness as well, even stronger signal that we're probably going to top out and drop a little bit, if not a lot, and give a shift in sentiment. If you see the open interest declining aggressively, say like this, and then you see the open interest rising, that's a strong bullish seasonal tendency. So I picked the low of the year this year. Isn't it interesting how once we got through, right, and it started rallying up, that type of scenario somewhat unfolded here, right? Drop in open interest, strong rise, rise in open interest. Wait. Let me see. Wait. Lost my train of thought right there. Wait a minute. So we actually didn't really see much of anything with COT, actually, at the beginning of the year. I'm assuming this is, wait, that's April. Yeah, that was the low of the year. Yeah, let me see. We got the drop there. I think I should go back in my notes and check that out. See the NASDAQ. And obviously sometimes when it's not there, you got to put it to the side, like similar to what we did with the bonds and yields today. this year, right? For the first whole start of the year, we had to put it to the side, right? But again, at any moment, if you can see a strong drop in open interest and a rise in COT, that's a very strong signal for price to be bullish, right? And then, of course, the opposing view, right? If you have a very dramatic rise in open interest and a dramatic drop in the COT, that's bearish, all right? And, of course, you got to couple it with the chart. If it's not in the chart, you're not going to be able to use it, right? If it doesn't make sense, if the COT doesn't align with like a bullish signal, right, or signature, we see here drop in open interest, rise in COT above the 50% zero line from the last 6 months. If that's not happening, or if that's happening and the chart itself and the asset you're observing is not unfolding in that way, you may have to, again, put it to the side. These are not be-all, end-alls. They're just added confirmation to things, right? But when you're using them and they agree, right, and you could pull these signatures out at whatever time of the year it's forming in, if it can align with seasonality as well. Those are very strong fundamental drivers in price. And then, of course, you add the interest rate markets, bonds and yields, and things like that, and it just becomes spectacular. And if you see this signature happening, right, one of these, bullish or bearish signatures happening in at least one of these assets you're observing, right, between the indices, that's enough, right? Like, that's enough a lot of times to trigger in a pretty large move. You can also identify this during a new quarter, when we roll over into a new quarter. A lot of times that's a pretty strong indication that we could have a quarterly shift. Then you couple that with seasonality, right? If it's got a bullish seasonality and you have a bullish signal here and we're going into a new quarter, you just wait for a shift in market structure to confirm what's being shown in the COT and seasonality, and you have a loaded mega trade, right? If you've been watching ICT's 2016 stuff, this is where he talks about this. This is where he teaches this concept, right? And mega trades generally come from these larger views aligning with each other at the right time of the year. So, it's spectacular. Of course, it's not something that happens all the time. Sometimes you'll see a signature and it won't work, right? It won't happen right away, and it'll come a little bit later. That happens because, this is a lagging indicator. It's showing you what the hand is doing potentially in the near future. That near future can be a month from now, right? But when that does happen, and you have the understanding of what we've talked about here, seasonality, COT, it's a loaded deal. And you could stick to your narrative for a while. You don't flip-flop just because you see price go against the bullish run, just because it drops a little bit. You'll stick to it until this is invalidated by using our validation process, and or you see something change in the COT data or some of the other assets, right? But again, when we're above the zero line here, right, I'll explain this and then we'll move to the assets we're going to look at today. But if we're above this zero line from the last 6 months and we're below the upper quadrant portion, these middle quadrants here, they tell you what we're in terms of a buy or a sell program, right? More short-term in nature, right? More month-to-month nature is here. Quarter to quarter, a lot of times, is what the larger view's from, right? Just this bigger range. But once you start slicing the upper quadrant and the lower quadrant, if we're above the zero line and price is inside the lower quadrant, you could still see a sell program. Like if price is declining at that time, maybe into a bullish order block, it could be in a sell program near term, or like a market maker sell model could be taking place, right? And then if we're, and that could be in a bullish scenario, right? And then if we're above the middle portion of the upper quadrant, that is a near term, month to month potential buy program inside of a bullish trend. A lot of times you'll be moving in the direction of the higher time frame when you see price up in that type of level. Sometimes obviously it doesn't show to be useful, and in that time you just move it to the side. Doesn't mean you just disregard it entirely, because when you're in line with it, with these topics here, I mean, the only way you'll be able to edify this and really see how amazing it is when you do the analysis, study it, and then see it play out. Again, I could talk about these things till I'm blue in the face, but visually seeing it yourself, or seeing me do the analysis like I've done numerous times, and then seeing it play out, right, as I'm describing it and visually showing you, I mean, it's one of those liberating things. Shows you that, man, we could really have an expectation and walk this market long term, let alone on the lower time frame. And then, of course, the opposite is true when we're in the lower quadrant, right? If we're in the lower quadrant below the zero line here from the last 6 months range, that's a sell program inside of a bearish overall market, right? And then, of course, if it runs up a little bit, gets inside this upper portion of the lower quadrant, that could potentially mean you're in a near-term buy program in a bearish market, right? With bearish sentiment season, COT-wise, right? So this could get a little bit advanced, right? I'm sure that some of this may go over a lot of your guys' head. But again, if you just maybe listen to this explanation a couple times, go through ICT's concepts when it comes to his lectures about it, and then, I talk about this from time to time. Just keep showing up and trying to study it, ask questions about it. It'll eventually stick to you. This took me 1.5 years to learn. After I watched it over and over and over, right? I needed that 1.5 years because I needed to see things unfold. I need to see everything, all the different elements work together to create the beautiful picture that is presented through this information. And again, a critically important factor, obviously, is understanding what I just talked about with the quadrants and how to identify the actual range and the actual zero line, and what it means a lot of times within each of these quadrants. But you want to make sure you're looking at these signatures in price at certain times of the year, going into new quarters, going into new months, right? When price hits a higher time frame PD array, right? And you're maybe expecting a large move. Well, it's almost guaranteed that it's a large move if you have seasonality, COT, and intermarket relationships agreeing with whatever that assumption is at that PD array you're looking to see maybe go higher, for example. Right? I mean, you could imagine that that's such a massive, detailed understanding and expectation for price to bounce off of a certain level. Right? And then you'll see it over time unfold. Right? And it just becomes more and more easy, first of all, to be able to do the analysis. And then just, much easier to understand over time as well, right? So hopefully this stuff made sense to you guys. It's very detailed, could be a bit confusing to some that may have just heard this for the first time, which is why I don't really talk about it too often, because, normally I'm on one-on-ones when I discuss these types of concepts and topics, or live with my private group. But I've gotten a lot of questions and interest on this, so I just figured, there's no harm in sharing this overall view and how I use it. And some of you guys will use it, some of you won't, right? It's not something that you mandatorily have to use. But again, I encourage you to try to study it and get familiar with it over time, because this and seasonality are two literally like bombs, right? That most people aren't using. And in order for you to get results that most people don't have, you got to do things that most people aren't willing to do. From, discipline, how you study, to the things that you're choosing to study, right? And then eventually, like this took a little while for me to explain seasonality and COT. But at the same time, if I was in my own time or with my private group, who I've talked about this a lot with, it would take me literally 5 minutes to determine our opinion on it, So, let me pull it up so we can, almost forgot to discuss like what our opinion is. So, again, price is above, right? So with all that explanation I just gave you, hopefully this makes more sense now when I talk about it, right? So when we're observing the relationship, right, these signatures here, I don't necessarily see much of a relationship that's promoting this. So if it doesn't show with the open interest and the COT that there's some type of dramatic offloading of buy positions, which is what the bearish signal is, or offloading of short positions, which is what the bullish signal generally is, we're just going to look at where price is at COT wise and kind of get a rough view of how that could potentially continue to impact price, right? Now, if we start to see a discrepancy here where open interest starts to rise aggressively and the COT starts to decline aggressively while we see this continuing to go higher, that's running the risk of us very soon taking a strong nosedive, right? Potentially, right? So we definitely would have to keep that in mind. So far, though, there's none of that showing. We are above the zero line across all three of these assets. Okay, so we're still in a buy program overall, based on the COT, right? It seems like we're in the lower quadrants though, with all three of them, so it could see a sell program. Pretty ironic how that's happening. Plus, with seasonality dropping aggressively prior to seasonality showing it rallying for the Christmas rally. It's interesting how all that's aligned, and we saw a pretty dramatic decline. From this perspective, it's not very dramatic. So maybe that's the wrong word for it. But we have seen a decline, and this stuff is, agreeing with that behavior, right? And what did it reach to? Volume imbalance, higher time frame, fair value gap, if you guys remember, and a wick, a couple of wicks, and now we're kind of finding support there. So again, we'll see. None of this is telling us that we're going to be overwhelmingly long-term bearish. It could simply just be a decline to start the quarter, set the quarterly low, and then the next quarter that continues, right, which is what we're in right now, the fourth quarter, may continue to just see buy-side delivery. Doesn't mean there won't be shorts, right? Doesn't mean that it'll just continuously go higher and never give us a decline we can trade or engage in. But, the overall sentiment is going to continue to be bullish, at least from what we've discussed here with the fundamentals. That's because that's what this is, right? This is fundamental analysis. Okay. Let me actually share that to my communities real quick. Right, and so with that being said, again, we got the NFP this week. So, like I talked about earlier, hopefully you guys understand the process of what we're going to be doing. We're going to take it easy, right? One trade. I'm going to put myself with one trade per day this week if it's offered. If things don't align, I'm not going to force things. And NFP, if I do look to trade, I probably will with my private group. We'll probably just take one trade. If it works out, great. If it doesn't, great. But we're going to only be permitted to take a trade after 7 o'clock, right? Because there's news at 5:30, which is the NFP announcement, and then we have a news event at 7. They're spread out. If you go back and look at this past week that just occurred, even when there's no NFP, but there's a news event at 5:30, and then another one at 7, basically split the news schedule. Generally, that has caused the first initial start going into that 7 o'clock hour to be fake. And then the 7 o'clock hour comes, and then it just dynamically, catapults or declines, right? Depending on what's happening, right? So it kind of just splits the delivery, right? The first stage is kind of fake, and the first news events are fake, right? Reaching into something like a sell side or some liquidity, and then once that other news comes out, maybe it drives once more and then ends up rallying, going against all the stuff that happened at the start of the day. That's a common thing when we have news events split like this, right? 6:30 and 7, it's kind of a little different. Doesn't necessarily always do that. That characteristic is extremely common. The split news, delivery, like the first being fake and the last one being the real one. when the news is split like this with 5:30 and 7 a.m. Right? I mean, you can sometimes see it too when there's 5:30 and 6:30 news. It's a definite fact that it's going to be a lot of manipulation when it's 5:30, 6:30, and 7. Sometimes even more, right? It's going to be very, very sporadic when that happens. So you got to be very cautious and choose to trade after the open in that regard, right? But yeah, so keep this in mind as well for like news analysis. When news is 5:30 and 7, when it has that large, like what, hour and a half split, it could be a little hectic. So expect heavy manipulation, right? But yeah, so hopefully that and the fundamentals make sense. We'll now move on to the bonds and yields. I'll try to get through this a little bit quick. Talked about some of those other topics in a little greater detail than I planned, so thank you guys for bearing with me. But yeah, so we're still going to look at, you know, how this is going to behave in here. We still got a weekly order block and a fair value gap. We have broke down below this. We have kind of traded into here. Let me actually, instead of a daily order block, let's actually make it. Let's make it a weekly order block. It is a. Let me go actually look. Yeah, no, we'll use the weekly. It's got the weekly order block. I think I'll close up the volume imbalance. It's already got enough reference points in there. And yeah, we could see the pretty decent reaction from this weekly bearish order block. Does this change the narrative? Does this look overwhelmingly bearish to you? If this was the 5-minute chart, would you think this low is going to be taken out? Or would you have to wait for something like this to invert? Right? We got the order block here. We have a fair value gap and a volume imbalance. So the line in the sand is going to, in my opinion, be the low of the weekly order block or the weekly fair value gap. Us closing below this weekly fair value gap here, the mid portion, that's going to be somewhat of a red flag. This high to that low, what should that leave in price based on what you guys have been seeing us talk about this year? Right? What should this be presented as? And why should it be able to hold price? But what is this presenting in price? We're not going to talk about DXY or any other asset right now. We're going to focus on, you know, what is this? If this was the only asset you were looking at, if this was, you were doing your analysis, what does this present, this high to that low? What does it leave behind, and why should it hold in this fair value gap? So yeah, what should this leave behind, you guys? This high to that low. If this fair value gap is going to hold, what does that leave this as? Yeah, exactly, Tyler. Order block, balanced price range, and potentially, you know, this low here may end up creating an intermediate term low. Right? So because this should be a balanced price range, we now have, you know, this whole range to refer to. But again, if it breaks through this, it's already breaking through this as an order block, which is an order block on the 2-week chart, 50% level. Right, so if it breaks through the fair value gap here, why is this my line in the sand? Because our 3 PD arrays are getting violated. Right? The 3 PD arrays are now being taken out that we like to use to validate the higher time frame delivery and lower time frame But obviously for bias and narrative, long term, overall, week to week, day to day, month to month, quarter to quarter even, this level down here is our 3 PD arrays. If this was the 5 minute, we would have the same perspective relative to whatever price is doing on that time frame. If this was what it was doing on the 5 minute, I'd have the same perspective if this was 5 minute price action. We would just have to be using obviously the higher time frame narrative as well, right? So this would be working in the higher time frame narrative if this was like a 5 minute chart. But I'd still be looking for the same things. If this was on the 5 minute and this is what I saw, this is what I would be believing is going to take place. It's no different from, higher time frame to lower time frame. It's all pretty much the same stuff, right? So this is why I'm going to assume, until proven otherwise, that this would probably continue to go higher, right? What does that mean for the indices and the currencies? They should eventually end up going higher still, right? And that would be supportive of the higher time frame here just simply being a retracement for the indices. We'll see, obviously. It's been a pretty dramatic sell-off. But yeah, we'll see. Seasonality, COT, those agree with buy-side indices. This is also somewhat agreeing if we're just looking at this perspective here. We do see that the 5-year is kind of breaking through. Let me see. It's kind of breaking through a fair value gap-ish inverted volume imbalance. It is coming down to this order block here. You can't use this as an order block because we haven't broke above, right? I mean, it kind of traded above it a little bit, but this wick is acting as a rejection. So we got equal highs up here too, though. And unless we break down below this low here, I'll continue to want to see this go higher. It did kind of trade through it and whatnot, but we're inside this monthly fair value gap. So I think that we should still be able to have a decent time seeing price run to the buy side. Should use this as an inversion still. And of course, if it breaks down below this and gets below the midpoint of the monthly fair value gap, that's a different story, because now we broke volume imbalance, swing low, and these down candles, and the 50% of this monthly fair value gap here that should act as an inversion. So that would not tell us that this wants to go to the buy side. If that happens, this fair value gap here will probably get violated as well, right? And same thing is true on this time frame too, or on this asset here, the 10-year T-note, right? So as long as this structure continues, I'm still aiming for the quarterly high up here. And then maybe even, we'll get excited enough to come up here and take this out too. That's a ways away. It may take the whole year to get up there. We'll have to just wait and see. But this here is my line in the sand overall. Right, you could see that it takes a lot for us to change our opinion, bullish or bearish. That's just because that's how price works, And I'm a much more conservative trader, right? Like I'll allow price to really prove itself to me before I change my opinion, because I've seen over the years, and based on what I've learned from ICT, that bias and narrative are two different things. I classify them in a more personalized way, bias and narrative, right? ICT sometimes refers to them kind of as a similar thing. I look at bias as a day-to-day thing. It could be consolidation, rejection, right, retracement, or it could just be expanding. And all of that's working within the larger grand scheme of things, which I decide on the weekly chart. Is a weekly chart bullish or bearish? That's my narrative, right? Bias on a day-to-day basis can be bearish in a bullish weekly trend, because it may be retracing on that daily chart while it's looking to expand higher in the weekly chart, right? So daily could be retracing inside of a bullish weekly direction, or vice versa if it's bearish. It could be running higher on the daily chart while it's still going lower overall in the grand scheme of thing on the monthly and weekly chart. So that's why I kind of separate bias and narrative. It makes you identify them both differently, and it kind of forces you to really trust and hold on to a higher time frame direction. That's the tactic I had to use for myself, so I would stop flip-flopping back and forth, and I'd be able to stick to one side for as long as possible until proven otherwise. And honestly, this year has proven, if none of the other years have proven that this is a good way of viewing things, this year undeniably has proven that separating bias and narrative can be extremely helpful in your learning and how to navigate bias on a day-to-day basis. Also stick to a narrative on this weekly, monthly chart. You know, it helps you realize, and it helps you also gauge when you're going to drop your risk, like another level to risk management and navigation of risk. It helps you know when you should lower your risk. If you're selling in a bullish trend overall in the weekly chart, you need to drop your risk because it could turn, right? It's counter trend. It's counter the narrative. You know, so, and then when it's back in line with the higher time frame weekly, monthly overall narrative, that's when you could be, you know, you could put your normal risk. So it kind of adds a layer of clarity, and it adds a layer of risk management, right? So yeah, this is what I'm going to look at, right? We're going to study how this is going to behave in here. If it runs up in here one more time and then again gets down below, that's not indicating that it wants to be overwhelmingly bullish, and then we may see a larger decline. And then if it breaks this, that entirely shifts my focus to looking for sell side. You know, then maybe we blow this stuff out. I don't think that'll happen. I think that, you know, this should be able to continue, especially with seasonality and just the overall fact that, you know, we're still bullish on the indices overall. It's just had a pretty strong retracement, which we'll discuss in a little bit, right? So again, this is my line in the sand down here. We're going to watch and see if if we can get a reaction from this to go higher, maybe get back above this volume imbalance, and then kind of show no reaction to the mid portion of this level here. Let's kind of look at this high. So there is somewhat of an SMT here. Overall, we're still looking like we're going higher, so this may be short-lived and may have been used for them to retrace. So we're going to have to monitor that as well. We do have this fair value gap here. So yeah, we're going to see what it's going to do inside this order block here on the 2-week. We'll see if we can't get a reaction off of that, and then try to continue going higher. If it violates the mid portion of this, again, that's a red flag, because then bullish order blocks are not going to be holding as they have up to this point, right? Aside from all the other things that we use to validate and invalidate, right? So hopefully this makes sense. If you guys have any questions, obviously let me know, but this is pretty much what we're going to be looking at here for this asset. I definitely like to see this turn into a displacement above this high. We could then use this as a breaker here, and then that could be what sends us up to the buy side framework wise for the coming week. All right. So we could see this too. You see this, right? The open for September, open, dropped, rallied up, went to the last week, right? I guess it was like the last 2 weeks. It took liquidity, it hit an old new week opening gap, hit that, and then broke down below this shift in market structure. And what is it reaching for there? It reached for the fair value gap. So external taken to seek internal, and now we're resting at internal. So we'll see if this can be an internal range to external range expansion, right? Internal PD array, discount array to try to target outside liquidity above these highs again if we're going to continue going higher, okay? So yeah, that is our view for the bonds. And now let's move over to the yield. So that has an impact or influence over the currencies, foreign currencies, GU and EU, and the indices. So indices, foreign currencies, this has an impact on what the DXY is going to do. So if that's going to potentially be bullish, and we want to see bullishness happen on those other assets, unless something changes, we're going to want to see this do the opposite, because this impacts what the DXY is going to do. Okay, we have seen this kind of invert this fair value gap. We have seen a pretty decent reaction to the buy side in the DXY. So there is some conflicting things happening. So we're going to have to keep that in mind. We are at the start of the new quarter. We are at the start of now a new month. We have NFP coming, so it should set the tone for the next week or so, maybe even the rest of the month, depending on what the data looks like and how they choose to react to it. And obviously what's available in price and what it shows us. Okay. So yeah, if we look at, start on this monthly chart. Just observing the lows. Let's observe the highs. So the highs. So there's not really like much SMT or anything. We can see that this is definitely declining into this. So we'll see if we can continue to react through that on this monthly chart. If it doesn't and we decide to rally aggressively, again, we're going to have to make sure we don't disregard that. We are still kind of stuck in a range here. It looks like it just broke out of the range, but we're going to have to close below this on a monthly basis to see if we can target some of these deeper sell side liquidity pools. We do see that we hit this wick here, so we got to see how the behavior is going to be there. We did take a stop hunt here. We did a stop hunt here, and now if you take the high extreme here to the low, wouldn't you know, we're at equilibrium and it's not really moving, right? It's kind of stuck there. So that explains why it's been so back and forth the last 1, 2, 3, 4, 5 months for the yields. It's just been stuck inside the range in anticipation for all the rate announcements and whatnot. We have more rate cuts coming. They're saying it's going to be a 50 basis point rate cut. I think that is actually going to happen this month in October. Let me see. Maybe not. Yeah, it's going to be this month, towards the end of the month. That is going to be very interesting. Let me see, what is their expectation? I've been hearing that they're going to try to do a 50 basis point cut. Oh man, that's going to be very, very, very positive if it does happen. Right? So yeah. So we'll see what happens with that. We'll go to the weekly real quick and then we'll move forward. We got this quarterly bullish order block, so a 3-month order block. We saw that monthly order block, so we'll see what happens. If we're going to see the DXY decline and we want to see everything rally, we definitely would like to see this decline. Okay, this bearish supports bearish DXY. This bullish, right, like say it uses this low or this quarterly bullish order block here to then send this through this inversion fair value gap, that is enough for me to think that we're going to try to target the sell side or the buy side up here. And and then we'd obviously have to adjust some of our analysis, right? And of course, if there's a cracking correlation between the interest rates and the bonds with the currencies, DXY, GU, and EU, and the indices, and like the relationships don't agree much, again, just like we did in the beginning of the year, we'll have to put this to the side until it gets back in line with whatever the market wants to do. So we'll just basically put that to the side if needed, and make decisions off of DXY versus what the foreign currencies are doing and what the indices are doing in relation to that. Okay, but for now, we're going to see if this can hold and push us lower. We'll see how we react with this. Are we going to reject from here, or is it going to fully invert it? It did fully invert this one down here on the weekly, right? So if we move up in time frame, let's kind of see what we got. So yeah, we got this order block here, so we'll definitely put that up. Midpoint right there is going to be important. All right. So yeah, we'll walk forward watching that. Hopefully we don't blow this high out. If we blow that high out, that may be something significant. We do have this SMT down here that led to this run higher. Basically triggered in the reaction we're seeing. This is the start of a new quarter, so I wouldn't put it past them to run this up, hit this level in here, which obviously we just highlighted, and then see them absolutely crush these equal lows. Because this is too beautiful, right? And the lows here on each of these assets, it's been left available. We do have this here that we talked about being a breaker that pulled price to the buy side. We walked that all the way up, all the way to this quarterly high. Kind of failed to get there though, and then kind of just hung around as it ended the third quarter. So again, we'll just see how this reacts in here. We're kind of stuck between this fair value gap and this reaction in here, which is also inside of a quarterly bullish order block. So, we'll see. NFP, I'm sure, will open the floodgates to what this is exactly going to do. But for now, right, from this high to that low, we're at equilibrium. We have this in a premium up here. So if they're going to short, it'd be a pretty good opportunity in here for them to do so above equilibrium. Right, PD array up here, invert fair value gap, shift in market structure. Got a run and stops over here. And seasonality is showing that bearish DXY should take place. Bullish indices and foreign currencies should take place. So this would support that relationship if it could break down, which is what I'm going to go into this week anticipating. Until proven otherwise, right, for this market. And then we'll see if that has a strong impact on the DXY as it generally does. If it doesn't, we'll just keep this separate from the DXY and the indices, okay? So hopefully this makes sense. Hopefully you guys understand what we're looking for here. And yeah, we'll see if this could be the quarterly shift, because notice how we're beyond the 20th day and we've had that shift in market structure here after taking buy side. So that would be pretty nice to see that get trusted, okay? So keep this stuff in mind, okay? And we will walk that forward. Now, going into the DXY. Okay, DXY has been under a lot of pressure, right? Overall, they're trying to digitize the dollar. I know that's having an impact. There's, lots of wars and, people trying to get off us as the reserve currency. But there's been a lot of good news. This has also been heavily manipulated to drop in price, which you guys remember we called this entire run up, run lower, all the way up to where we're at accurately. And then all the way up into this moment in time, we've had a rate cut that's bearish generally for the DXY, bullish for the foreign currencies and for the indices. We've also, from what I've been able to gather from some of my friends that really dig into the economics of things, this has been a heavily manipulated downturn in the DXY to get it to be cheap or lower in price, so exports from the US could be cheap and it could benefit our exporters. So this has been heavily manipulated to go lower, right? And it doesn't seem still at this moment that that's going to stop being the case. We have a low down here. We have this low that was taken out, obviously, and now it's kind of rejecting. But if you take the range that took buy side and took sell side and you measure out where price is hanging out at, given the overall range here, we could see that we're clearly at equilibrium. And not only that, we're now trading into this wick in here as well. I can measure that out. All right, so we're inside that wick here. And we're hitting the equilibrium or 50% level of that wick. So we're at equilibrium from this high to that low, and we're kind of overlapping the middle portion of this wick. If this was the 5-minute chart, would you say that this is going to overwhelmingly go bullish? Would you trust that it's going to go bullish because of what's happened so far? Is that something that you would honestly tell yourself? If so, I'd like to know why. Right? But if not, if you think that if this was the 5-minute, would make sense for it to go lower, I mean, nothing in here is telling us that we're going to be overwhelmingly bullish. What changes that? If the yields run higher and we see another, couple of weeks displacement getting through this, showing no respect to any of this, that could be very significant and mean that price is now going to finally rebound with the DXY. And we'd have to obviously adjust in that case and expect a potential downturn in foreign currencies and the overall indices more long term, especially if the yields and the bonds support that eventually. If this was to take place to go higher, and that stuff overlaps it, then you could be pretty confident that it's gonna have to be adjusted, right? We'll have to seek the other side. Okay. So we're gonna continue to watch this, right? This is something that we're gonna want to see hold, right? So we want to see price not spend too much time up in here. We are consolidated. It is going sideways. It is at equilibrium from this high to that low. So until it gives us a strong indication that it wants to go to one side or the other, we're going to continue to support the structural integrity of the downturn and continue to try to see any type of rally eventually turn into a decline. Short term, you may see a run higher that leads to retracement in the asset you trade, S&P, NASDAQ, whatever asset you trade. That may trigger in a short-term, day-to-day scenario where price goes against the higher time frame narrative. But that's why we classify bias and narrative different. So we can trust and remember what the higher time frame is doing, hold on to it, but still be able to navigate with our risk managed properly. Okay? So yeah, with that being said, we got this high up here to watch. This wick here is larger than all the wicks in the area aside from this one. So we can use this wick high to low, get some quadrants in there if you want to go in there and do a study on that. I would say that if we break above and violate the 50% of this wick in here, that'll be my line in the sand overall. Oh wait, let me actually keep that. So one thing I haven't mentioned today is the very first thing we look at, right? Obviously, which is just a review from the last couple weeks. The current candle's high and low, and the previous candle's high and low, and any high or low that's really close to where price is at, that would be potentially reasonable to reach into. So that means these highs up here, these relative equal highs. That's what this is. Makes me feel like they will potentially want to punch up through that maybe once more. Still within this wick is still being respected. So if we violate that wick, if we violate the 50% of this wick, that'll be my line in the sand. Okay, on a weekly basis, right? This S&T also would be further supported by us breaking through that, and that would be a pretty decent long-term indication, especially if the yields end up rallying too and turn off to the downside, the yields being this right here. Say it displaces above this and inverts this fair value gap while the DXY breaks up and violates these levels, right? That obviously that puts us in line with going in that direction, and that would have repercussions for the indices and would probably see a pretty decent decline. We're not going to assume that, obviously. We're going to stick to what the narrative is. Still could be a retracement to go lower. It's just kind of in time distortion overall, being held at equilibrium and inside the middle of this wick here. right? So we also have this order block here. 50% of this order block is here. So if it stops there, the wick is fine. It could keep that wick going. But if it displaces below the mid portion of this order block, that order block is still valid. So we wouldn't want to get rid of that. Okay. So we're going to stick to that. Swampativity. We're going to move on to that very soon. We got the currencies to do, and then we'll be moving on to the indices. So that's my opinion on the DXY. We did see this strong movement here. So again, we're not going to just go in there throwing in any shorts, right? If we were trading the DXY, we wouldn't just start to short because of this. Topping out and the weekly still not showing bullishness yet, or bearishness again. But we're going to definitely keep this in mind. Watch this high, right? I wouldn't be surprised if we open up, maybe hit this fair value gap in here because a new candle is going to form. Dig into this this fair value gap here and then rally up, take this. Maybe it does that, then sets a high and then looks to start declining again. For now, right, we're going to have to see a very strong reaction to the downside, inverting levels, breaking through bullish order blocks, and not respecting these types of PD arrays to the buy side anymore. And then followed by a strong displacement to the downside. That'll kick us back in line with what we've already been following, bearish DXY, bullish indices. But we have shifted market structure here. So again, it just further amplifies the need for us to, continue to monitor what it's going to do and not hold on to anything too tightly. Obviously, we have one side favored over another, right? In this case, I would, on the weekly time frame, like to see us on the daily time frame start respecting downside again. But if it doesn't do it, we have to be able to not be married to things. But we are going to have a favor for that scenario to unfold. And we're going to just observe how this is going to be respected or violated, right? So if this continues to go higher, that'll continue to push the currencies lower and the indices lower. So we won't be ready for this to want to rally up if the DXY is declining, or if the DXY is continuing to rally aggressively. At the same time, we're trying to find a buy position in the indices. We'll have to continue to keep this stuff in our mind, monitor this stuff, and see how things unfold. It is a new month next week. It's the start of a new month. So power 3 on that monthly chart needs to be considered. And it's the beginning of the week. And there's NFP next week. So, lots of things you got to be cautious for this coming week. But we're going to see if we can eventually see price fold into downside on the indices, given what the yields are doing. We'll get a better feel for that when we push through a little bit of this week. And then, we'll see how the bonds are going to respect this or violate it. This dropping supports downside indices, higher dollar. And, this going higher obviously supports that as well. So we don't want to see that if we're going to try to catch further buys in the indices and lower DXY. We got a couple things we got to look out for. Not be too aggressive. So, that's kind of the behavior anyways. We're never too aggressive. And we let price speak. We don't assert our will and what we want to see in the market. We definitely wait and allow price to print, follow our process, follow our rules, stay disciplined. And when the time comes, if we got to make adjustments, we will. But this is what we're going to stick to in terms of our opinion. And we're going to see how we start this coming week, considering this shift in market structure, right? As maybe the start of a scenario where we're going to have to change our opinion. But we're not entirely convinced just yet overall. It's definitely a concern if this is going to continue and we can't break down. A concern for bearishness to continue. Buy side may look to be favored in that case. We'll see if we get above this high here and it opens or closes above it and then trades into this order block and then starts to rally again. Obviously, downside is going to be off the table until it was to displace back down to the sell side. Right, so we'll go into this week looking to see this possibly continue, maybe reach up to these equal highs, and then we'll see how the behavior is above those highs once we get there. Right, if it sweeps it and aggressively reprices lower, it'll just further amplify the reason we stick to the weekly analysis for our narrative and why we hold on to things even in the face of stuff like this. We held on to bearishness in the DXY in the face of this. Right? This was much larger than this. Wouldn't you agree? Why do we hold on to this? Being bearish in the face of this, going higher like this? Because we were looking at the higher time frame PD array that it traded to, which was this area. Right? We talked about this high when it got above there. Even though it was big on the daily chart, as we just looked at, it closed below the level that was going to invalidate the continued down movement, which was this high, right? So again, we're in the same type of scenario here, and we're still at equilibrium, and we're still holding on to this wick midpoint. So it can easily just have been a rally to sweep out buy side a little bit, and then just decline again from this weekly perspective. That's why we're going to wait and not change our opinion just yet, and not disregard the weekly bearishness. Stuff like this really helps you gain experience in doing that, right? So hopefully those of you that were here with through this with me and saw the conviction we had and listened to the reasoning, hopefully you can take that experience and use it in this as well. And if we got to adjust and it makes us adjust, we'll be here to do it and we'll talk about it. But we're going to have to just wait and see. Okay? Just to make it super clear what our opinion is, I want to see if we can get back down below this daily fair value gap. If we open up, hit this fair value gap, and it looks like it wants to go higher again, it may just want to sweep this out, and then we'll see how price behaves above these highs. Okay, so hopefully that makes sense. Hopefully you guys are clear on what we're looking for there. We'll move on to the foreign currencies. Right, the foreign currencies are kind of a mess too, right? They are still somewhat gravitating to the buy side. It's supported by bearish DXY, as it has been. We are inside of a bullish monthly breaker. Okay, but on a more short-term, near-term basis, we're also inside of a weekly bearish order block, which is also a monthly order block. And we're also inside of this weekly bullish order block. So something's going to have to give in here, because from this high to that low, we're at equilibrium. So we're stuck in consolidation. Do you see a commonality here in terms of the conditions overall, right, on this higher time frame? Lots of things are kind of undecided, right? We can use previous data, right, what it's already done to somewhat make a determination. But we're seeing signs that things may go against that. The SMT, DXY potentially looking like it wants to go higher, right? We have to wait though. We're not fully there yet. And then, we got to still see kind of what the bonds and yields are going to look like inside these areas, because these areas can easily trigger in the response to continue what's been overall happening recently up to this point, or turn that off by breaking these levels and then support like the downside indices, buy side DXY. All right, so these are a lot of different things that we have to pay attention to, but remember, the simplest way to identify near-term liquidity, aside from some of these things that we've been talking about here, pretty much before you even consider some of the things we've talked about, is the high and the low from the previous week, and any high and low from a previous week that's still in close proximity. Like this low is pretty close, just in case. This wick, right, this high, right, if we could trade into that, that becomes important. So these are the near-term most important liquidity pools, aside from like these equal lows, which obviously you want to keep tabs on and pay attention to. And then, of course, aside from that, we have the order block here, right? We also have a volume imbalance. We have a fair value gap in here. So we'll kind of keep that in mind. We're not going to put it up, but we'll monitor it, right? We'll keep tabs on it. We also have this large wick here. It's kind of traded through it. That's still important, the quadrant levels of it. As you guys know, we've been using wicks for years at this point. ICT has definitely put a emphasis on it from what I've seen recently about the wicks. But luckily, you guys are in a place where most of the stuff he talks about is always being used and talked about. He may have some, extra things that he puts onto it, but if it works for you, whatever else you hear, great. But if you have a process that you're able to make decisions on, and you're not going to tinker with something that's working, I encourage you guys to keep digging into ICT stuff, obviously, and then listen to mine too, as a complementary amplification for things. But you're not going to want to be a student forever when it comes to his concepts, because you'll end up becoming a library. Like if you're trying to use every PD array, learn every single thing that he's ever talked about in 3,000 videos he's posted, you're going to be a library, but you're not going to be an effective trader because you're going to have too many things going on. You need to find the things that make sense to you, that are important to you. Maybe it's wicks, order blocks, fair value gaps, the liquidity mapping principles that we talk about for identification of liquidity, bias and narrative, the process I use, the validation process I use, risk management protocols that I use, and then your one or two models that you like to gravitate to. I mean, all that stuff is pretty damn amazing, right? All that stuff that I mentioned, we talk about all those different elements constantly, all the time. So if you can have elements in ICT's concepts that answer those questions, eventually you're not going to need much more. I have friends that don't use order blocks whatsoever for entry. They just use them for extra confirmation. They don't use them for entry because they're not comfortable with it. They're more comfortable with a fair value gap or a breaker or, optimal trade entry, whatever the case may be. And they're not concerned about someone that's taking trades at volume imbalances or rejection blocks or any of that type of stuff. They're not concerned with turtle soup. They don't even look at turtle soup because they already have what they want or what works for them and answers all the questions. It allows them to make a decision. They have enough information to make an accurate decision. Once you get to that point, the goal isn't to learn every ICT concept. The goal is to figure out how you can run your trading business effectively and have a complete process. You know what I mean? And that's not going to come from you knowing every concept. You obviously want to look at as much as you can at first to find what works for you, what makes sense, and build your process from there. But once you have something that works, like if you use a breaker and you're able to call bias and overall narrative and you're consistent with it, or you feel you're consistent with it by data you've collected, eventually you got to have that conversation with yourself. I have that conversation with my students all the time, And most of the time a lot of them are ready to go. They have all the answers that they need. They have enough information, and they were potentially just adding on too many things. Like every new like the Reaper and all that. Like I don't even get into all that. Like there's all these extra things. I don't care. Okay, I have enough to make a decision, and that's some of the stuff I don't spend any time in. This year was the first time I looked into ICT's concepts or his videos in years. Because I found what I wanted. I got this knowledge, this wisdom from one of my other ICT mentors who has 15 years experience. He was with ICT when ICT was on message boards, right? Like didn't even have a mentorship. He was just on baby pips, So, I mean, it's the wisdom shared or learned through experience is just it's priceless. And getting around people that are a couple steps ahead of you, maybe way ahead of you, can help you really organize your thoughts and organize your learning a lot easier. So hopefully you guys get that from the content that I provide, and you guys can also benefit from the wisdom I share from massive investments into what I've learned and people I've gotten around. Aside from the free YouTube stuff that ICT gives, right? You can't buy experience, right? You can't. You could borrow it, and you could definitely learn from it, and it's absolutely recommended to do so because it speeds it up a little bit. Just simply being around someone that has experience. It's like shadowing someone that does the job you're trying to do. Obviously, instead of learning it from scratch all by yourself with no help at all, just videos and whatnot, or maybe like lectures, Obviously, it's going to take longer than if you had someone that's in the field doing it for 10 plus years, or even just 6 to 7 years, people that just have arrived, that prove that they've arrived. Just getting around those types of people help you navigate the massive library of information that's needed. I mean, that should be common sense, right? As long as they got integrity and they're not trying to repackage things and say it's theirs and discredit ICT in whatever way, they're worth listening to if they don't do those things. Hopefully you guys feel that way about this channel. And I've gotten a lot of good reviews, so I'm grateful. Let me see. So, hi, Fritz. Welcome, brother. Okay, ICT has indicated a lot about wicks recently, but isn't it just a way of looking at lower time frame structure and a higher time? I mean, I guess you could look at that, but it's more of a higher time frame reference being used down to the lower time frame. Because the lower time frame's creating the storyline that's being shown in greater detail on that higher time frame, right? So the main idea, the main things that are taking place is rooted in the higher time frame. All the intricate details that create that higher time frame delivery is going to be shown on the lower time frame. And Fritz, you've been here for a while. We've been talking about wicks for so long, the whole entire year. Since you've seen my content, you probably see me referring to wicks. Students in my private group see me talking about that for years at this point too. It's like a review for a lot of us that have been here for a while. It's new to a lot of people though, so thankfully he's coming out and focusing on it for everybody. BPRs and or breakers depending on how far it moves into the wick. I guess that's a way you could say it, but the BPRs and breakers are all encapsulated inside that wick on the higher time frame. So all that stuff that you see on the lower time frame is the story that created that wick on the daily chart. That's why when a wick overlaps, like a displacement that happens, it's already got a lot of price delivery in there, and there's a bunch of things like you just mentioned that's already taken place inside that wick. When you're looking at it from the higher time frame, when you drop down to the lower time frame, you just see all the details. It's like a microscope, right? You put a microscope, or you look at something like from this view, from your normal eyes, and then you get that same object and you put the microscope on it and you look at all the intricate details. That's the lower time frame. The higher time frame is the picture that you're looking at, just with normal eyes. When you drop to the lower time frames, you're getting a lot more of a zoomed in scope of that same object, right? So it's pretty much, it's kind of like the fractal nature and price. It's kind of what they mean by that, right? Just kind of like pictures inside of a bigger picture, essentially, right? That's why everything you use on one time frame can still be used if you're using a different time frame perspective. The same stuff applies, but it's just working inside the higher time frame picture, right? Because this is where big money plays their game. They're not on the lower time frames putting in billion dollar positions. They got to break those positions up so you see those positioning, the positioning behavior happening when they're retracing and going to certain levels and going to certain PD arrays and taking certain liquidity pools and rejecting aggressively to continue, and all those different things. They got to layer their positions in. They can't just throw $1 billion into a trade, like one trade. Like, it has to be spread across. It's just, I don't know why that's the way it works, why that's not possible, but that's kind of just what I've discovered, or what I've been told, what ICT has mentioned as well, about how they operate. And then of course there's commerce too, like with commodities and different things, right? Like they want to lock in a certain price, so they'll buy like a ton of a certain commodity at a specific price. So when they lock it in with those contracts, or however they do it, even if price goes up, as they're selling their product, they're still locked in at that certain price. So they're buying tons of positions, right? Or tons of things that relate to commerce when it comes to certain price levels in the market, and they lock in their position with contracts, and then for however it works, like in a more advanced level, that's kind of like the gist of it when it comes to commodities, right? That's why commerce is done also inside of the markets, right? So it can get real complicated, right? So I don't really point out stuff like this. It gets real complex for many things. I don't really trade commodities also, but very similar things are happening when it comes to big money taking positions in assets like this. And of course you can, dig up more information about it if you want to dig deeper, but honestly, that's not something that's going to help you trade better, which is why I also haven't tried to break all that down to myself. I just got the gist of things and I'm good. I just need to be able to make decisions, know all about the asset that I'm trading, which I do. I know all about the indices and whatnot, and bonds and yields and DXY and foreign currencies and stuff, because all that stuff's used for me to make decisions, so of course that's not me encouraging you not to do studies into other things like how commerce relates to the markets. You can do that. It's probably an interesting study. I'm not at all trying to discourage you from looking up anything. I'm just telling you my perspective and kind of what's important to make decisions, and how I see how I classify things as important or not, right? Fritz said, yes, I have. Wix changed the game for me a lot. Oh, perfect. Yeah, Fritz, we talked about Wix a lot, huh? It's pretty interesting to see ICT come out and isolate that topic. It's pretty good. I like it, right? And I'm sure it's going to do a lot of good for everybody. So God bless that man. Seriously, he is absolutely amazing. And of course, if you guys have any questions about anything that you see him talk about, I'm more than happy to dig into it. If I know a lot about it, I'll talk about it. If I don't use it, I'll be honest and tell you it's not necessarily something I've focused on. I've never claimed to know everything. I just know what I know that works for me, that I've used to help other people work on their own stuff. And, eventually you'll grow on your own, right? We all have to get to that point eventually. You don't want to have to always be stuck needing someone else's opinion. And then eventually, you could become an asset to the trading community as a whole as well, right? We can help each other get there. That's all I'm doing when I'm live. I'm trying to help give you a hand up, help you navigate the foggy, murky waters at times in the market. Give you the tools that I operate with. I offer, obviously more one-on-one type of relationship if that's something students want, but that's not going to be for everybody because it's a lot of work. And sometimes the YouTube channel is just enough. Like students like Tony and a lot of you guys, you've gotten a lot of value from the YouTube channel, and I'm grateful. I'm grateful to have been able to do that and give that stuff to you. And there's so much more we can get into, and as you guys grow, you'll have more deep questions about more topics, and I'll be here to help you navigate some of the more advanced things as you grow as well. So just trying to be here to help, you know what I mean? But yeah, so getting back to the chart, like I said, we're kind of stuck between these two. So again, we're going to have to see where are we going to break out to. If we break out below this wick here, I'm going to classify this wick as a balanced price range. So it should not have to trade back up to the 50%. And that would end up being my line in the sand for bearishness, right? If we were to break down and get back above that, that would turn me off in terms of price going lower. But that's, of course, if we break down through this wick and close below it. A simple closure below this and closing above this order block here does not tell me that we're overwhelmingly bearish. We do have this SMT that will be confirmed if we do shift below this and violate this order block. That would put us in position to then target this for the near future. Right? And then, of course, we got the monthly fair value gap that's down there, too, that could get reached into. So yeah, but again, if that happens, right, if it chases that, we're going to turn off this monthly bullish breaker, and then that may send us even deeper into the sell side. But we'll cross that bridge once we get there, if we get there. But for now, again, we're going to study how this is going to behave in here. Are we going to react to this? Is it going to open up, maybe try once more, fail to break through the wick down here, respect this bullish weekly order block, and then continue to run higher, violating these levels, right? Inverting things like this and like this fair value gap, so on and so forth, right? Or is it going to, like I said, break down and try to get down here, right? I'm assuming that we'll continue to try to go higher. Nothing really has shown us overwhelmingly. We do see SMT here, so smart money is doing something. When you see SMT, smart money's hand is on the move, you know. So it's the way ICT has placed importance on this, right? That Kraken correlation shows that something's happening on the back end. Something is happening, right? And you know, we're just gonna have to obviously find out what that's gonna be by letting price react to some of these PD arrays and give us more evidence, right? But for now, right, we're in consolidation, high to low, stuck in here, maybe just time distortion. Go to the monthly chart. We got a lot of overlapping candles. Do you guys remember what the condition is if we have overlapping candles on the monthly chart, weekly, daily chart? Do you remember what condition that puts us in? Just let me know in the chat if you remember. And then, of course, you know, once we get done discussing this, we'll move on to the indices. Again, I appreciate you guys sticking with me. A lot of people can't sit through these calls, and it's unfortunate because, you know, that's where the value is. It's very, very deep, and I'm not a signal junkie creator, right? I don't just toss signals. You know, I teach you how to be the signal provider, and I think we've done a great job of that this year. But not everyone's going to become that, right? Okay, Swamptivity. Well, since you're new here, welcome first and foremost. I didn't know that you were new. But yeah, welcome. I'm grateful you've chose to spend time here. We go through a lot, as you can see if you've been here, maybe simply just for like the last hour. We talk about a lot of things that most people don't talk about, and we get very detailed on things, whether it's psychology, whether it's technicals, why certain things are important, what affects what, right? How to validate and do all these different things and do a lot of advanced things, you know, and just do overall market analysis for all the assets that will help us make decisions. And you could be anywhere on social media, obviously, but the fact that you're here, hopefully you've been getting value, and you know, hopefully this can be an asset to you, this content. But yeah, so since Swamptivity isn't familiar, do any of you guys that have been here for a while remember what the condition is when we see overlapping candles from the monthly or on the weekly, or if we're on the daily chart, if we're looking at those time frames? What does that create? What condition does that create? Is it trending, right? Is it a reversal? Is it consolidating? And is it high probability or low probability? Low probability consolidation. Exactly. So what does that mean? What does that mean for your risk management? If you were, like, say we're going to go into trade this week, if I was trading the currencies and this is what we saw. Because it's low probability consolidation condition, what do we do with our risk protocols? What do we do? Do we keep it the same? Or do we use our more conservative risk approach, where we drop our risk by at least 0.25% up to 0.5% and just simply allow for one trade, right? One trade max, right? Preferred, right? Yeah. And half risk. Yeah, exactly. Right? Exactly. So that that's something to write down, right? That's our conservative risk approach. Hold up. Oh man, sorry, I didn't want to cough in your guys' ear and blow your ears out. But yeah, so when we're in consolidation, whenever it's classified as, hold up. I don't know what's going on. But yeah, so when we see consolidation, when we see overlapping candles, or any of the other signatures that we always talk about in terms of high probability or low probability condition identification. If there's news coming, like if it's a day before a holiday, day of, day after a holiday, if it's a week before, week of, week after a quarterly rollover from one quarter to the next, if we're in the start of the year, like January, or at the end of the year, December, if we're at the start of the month or the end of the month, all these are times in which price could present us with low probability conditions. Does that mean it's always going to be low probability in that type of scenario? No. But those are situations where you got to think about potentially managing your risk, dropping it a little bit to mitigate what could potentially occur. Because statistically, on a regular basis, when these scenarios unfold, most of the time it's going to be a little bit hectic. And you may not want to push fully in that scenario. If there's cracks in correlation all over the place, right, a lot of times that can also lead to low probability conditions, right? So if we're going to have our conservative risk approach, right, or if we're going to apply the conservative risk approach, a lot of times that's what happens. That's when we do it. We also a lot of times place that conservative risk protocol on Mondays and Fridays as well. And we never take trades on Sundays ever. It's non-negotiable. I don't care what anyone tells you. We got to make sure we're allowed to see what's going to take place going into the start of the week. We got to see what the start of the week is going to present us with, so we can start to map out what the weekly profile could be and what the power of three dynamics are going to unfold, or what they could unfold through the rest of the week, right? Based on what happens at that start of the week. Some traders only choose to take trades after those days have passed. Sunday, Monday, and Tuesday, Wednesday, Thursday are their main trade days, and they don't even trade Friday, Sunday, or Monday because they're using those days for intel gathering, right? Or, another low probability scenario generally is or occurs on the Wednesday ahead of NFP or FOMC. And then, of course, NFP and FOMC, you should automatically have a low probability condition unless, right, you wait for the first 30 to 45 minutes after the announcement comes out for FOMC or NFP, and just kind of get a feel for where price is potentially going to reach for, what's left available based on our liquidity mapping. Swamptivity, if you haven't joined my free Discord, definitely go do that, because I have something called our liquidity mapping protocol, right? So it's kind of just like a layout of different liquidity that's important from higher time frame to lower time frame. I have some other considerations in the explanation I have related to that as well, which is extremely vital, very, very helpful. It's one of the most helpful things that I provide, that, well, based on what students have told me, it's one of the most helpful when it comes to price navigation and how to identify what liquidity is the most important. Okay, so definitely go check that out if you haven't already. If the link doesn't work, let me know for the free Discord. Any of you guys that try to join it, it's been expiring every week for whatever reason. I put it on never expire, but I don't know how to fix it. I've put it on never expire and it just continues to do so. So I'm not too sure how to fix that. If any of you guys have wisdom and knowledge on how I can do that, or what I'm maybe doing wrong, I would greatly appreciate it, because that is absolutely annoying. Okay, so annoying. And I don't know when it happens, because it'll be for a week it'll work, and then a month it'll work, and then all of a sudden just cuts out. So it's very annoying, right? So. But yeah, so definitely go check that out. It's always in the pinned messages for the current month, under the current month tab, and it should be at the pinned messages, right? If you click the pinned messages on any of the previous months too, you could see that's where I place a lot of other resources as well. And then, I definitely want to throw this in there for those of you that may be new. Eventually, right, if you do end up liking the way that I do things and maybe you want to get more involved with this community, I do have a apprenticeship group that you could check out eventually. You don't have to. I'm not encouraging you to join it, but if it's something that you feel could potentially be beneficial to you, as you get value from the free stuff that I provide, definitely you could take that into consideration. Just go check out what's offered there and let me know. If not, so be it, right? You're still part of the family here in the WMG YouTube channel. And, your time is a currency as well. You know what I mean? So I appreciate you giving me your attention and, feel this is a worthwhile community to spend some time with, I guarantee you that your trading won't be the same, even if you just stick to the YouTube family. I have many students that have been able to become funded this year just off of what I've told or talked about on YouTube, so it's incredible what we do here. So hopefully you guys can get value from this in the near future and think about that stuff. So again, we're in low probability conditions because of what we talked about earlier, just automatically without even looking at anything from the news or anything else. Just the simple fact that we're overlapping candles, it's a problem. Okay, and you could see on this time frame on the weekly, we're trapped between this order block and this order block. So can you make an argument heavier on one side or another? Not necessarily, unless you just want to stick to the buy side, going to the buy side, because that's what it's been doing generally, right? It hasn't really fully committed to us going lower essentially yet. And maybe it will displace below this and trigger that in, right? If we break this low and we close below this 50% of this order block, that puts us in position to aggressively try to seek the sell side here. If that doesn't happen, we're still not fully committed to the sell side, and we will either consolidate or end up setting up another leg higher, which I would prefer to see, because, if we're going to see higher indices and lower dollar because of the bonds and yields relationship that we currently see, that's what's going to happen, right? If that's going to be the case, that's what we'd like to see. That's what I'm going to want to go into this week anticipating, but we'll see, right? We have an allowance for price want to get down here, but before that happens and confirms the downside entirely, we're going to stick to the fact that we're going to potentially see this hold and then try to see if we can't justify that opinion. Okay, and again, the most important liquidity pools right now for all of you guys that are potentially new, that maybe struggle with liquidity, previous days highs and lows, previous weeks highs and lows like this, and previous months highs and lows are the easiest liquidity pools to pay attention to, along with previous session highs and lows. You take those liquidity pools, put them in a list, and you look for those every single day. You will see that there's always something to identify. Okay, there's always something to work within, and you don't have to seek like extremely far, like this high up here. You don't have to aim there to be able to think that you have a target. The liquidity pools that I just mentioned give you a target every single day, literally. And if there's a target every day, most likely you can find an opportunity every day. Does that mean you will find a profitable opportunity every day? Absolutely not. Because you could make a mistake, especially if you're new. You may target the previous day's low when it seeks the previous day's high because it's a retracement day or something, right? Things can go wrong, which is obviously why experience is going to be very helpful, and spending time in communities like this is going to help you as well, right? But yeah, hopefully, if you guys haven't dug through that or did a study on that, definitely that's another drill I want you guys to do. Go study those highs and lows I just mentioned and see how often they're used. How are they used within the daily range, right? How are they used? Are they used as opposing liquidity and target liquidity? Are they more often than not used as just target liquidity? Is one of those highs and lows, or highs or lows, used more often for setup liquidity within Power 3, and maybe a different one is used for target liquidity on a more regular basis, right? Like, these are observations you could make doing that study. And you can imagine, hopefully the way I just explained it right there, you can imagine the value you can get from that simple study just alone, not even looking for PD arrays or anything else. Highs and lows are PD arrays, but not even looking at anything else, just going and doing an isolated study like that. You will be shocked at how much you learn just by simply doing that, especially if you obviously have more experience. Even if you have no experience, or like maybe 6 months. I shouldn't say no experience, but even if you have like 6 months experience at least, you'll be very, very surprised. That's one of the things that I did. And I learned in a Twitter space ICT had that process, identifying those, was something ICT used when he was younger, when he first got started, that really helped him speed up the process in his learning when it comes to price navigation. He literally said it just like that. This helped me when I was first starting out to be able to navigate price effectively. I was blown away because he's never admitted that. He's never highlighted that. And I always wondered for a long time, for like at least 2, almost 3 years, within my 6 years of experience, how was I able to kind of get to clarity so quick? Because within the first 2 years, I was already like, okay, I knew what I was doing. I got my first funded account in the first 2 years with FTMO, right? Until they took my account, which I'm not going to get into that whole situation because they banned U.S. traders or whatever. But then from there, it was just nonstop growth constantly. And it was clarity. I knew where price was going to go. And it just got better and better and better up to this year where I'm calling every single month bias and narrative correct. And a lot of that, a big part of that price navigation skill set development it came from the liquidity mapping that I talk about, right? The certain levels of liquidity and how they're used, the relationship they have within the daily and weekly range, right? Session to session, all that stuff. Yes, Montivity. It's been that way for, man, what has it been? 3.5 years now? Since I've been teaching, that's the level that I was able to accomplish, right? I've made other traders as well become full-time, quit their jobs, cut their hours, do whatever. So, it's been a spectacular spectacle for the last couple of years. This year's the first year I've been fully on YouTube every single week. But I've been every single day in my private group for literally 3.5 years doing this stuff constantly, every single week, day, month. But I this year decided, I was doing YouTube a little bit, and there's probably a lot of people that could find value in what I do. A lot of my students were pushing me to do it too. And so I just decided, why not? Why not share with the public, in a group, in a industry where it's just a bunch of garbage, nonsensical people that just lie and scam and can't do any of the stuff that we do, simply just calling the market on a week-to-week basis, let alone on a live call in front of people taking trades. I mean, the industry needs more people willing to be out here and be honest. I don't ever claim to be perfect. I make mistakes. I'm very transparent with my mistakes. If I don't know what's going on, I'll tell you. I'm going to have to wait for more information. Like that honesty, the reality of trading that's projected by people that know what's going on, that truly love this industry. There needs to be more of those people because it's filled with a bunch of 20-year-olds that come out here and they scam people. Some 20-year-olds are really good, right? That's not to hate on their age or whatever, but they don't have any experience and they're out here trying to tell so-and-so that they, are doing this and doing that, and they're not. And then it hurts people, and then it puts a bad taste in people's mouth. And then the traders that they should be listening to, they're skeptical to listen to because of these scumbags. So I always encourage all of you guys, both my private students and those of you that follow me here on YouTube that have been getting good results. I encourage you guys, eventually, if you do feel comfortable, the industry needs more good voices that are honest, that aren't going to sit here and, lie about their demo accounts being ran up and fake everything. Like people that have wisdom that are willing to share it. The industry needs more, because I've been burned just like the next guy. When I first started trading, it was absolutely horrific. I was in a hard part of my life at the time, and the hope of becoming a trader was the only thing that kept me positive in any way at the time when it was happening, or when I was first learning, which was 2019. Right as we went into the world shutting down and chaos erupting across the world. I had a lot of stuff going on in my personal life too, but yeah, the world just needs more, or the trading industry specifically. I don't know about the world. A lot of the world doesn't even know what we do. But the trading industry needs more people like that. We need to be able to drown out the nonsense, because trading is one of the best ways to change your whole life. And if it's not full-time trader, if it's just, I just want to do this to supplement my income, or I just want to do this so I can save up for a house, or I want to do this so I can do this or do that. Because a lot of people love their jobs. A lot of people love their jobs, and some traders don't ever want to leave their job, but at the same time, you can do anything that you choose to do if you have this skill set. And it doesn't even have to be a day trader. You could be a long-term retirement account trader, right? That's just trying to build for retirement through day trading. You can do that too, right? You could, or through swing trading or position trading, or just simply long-term investing. In crypto, the same stuff happens, and in options, the same stuff happens. The same stuff we do here can be applied to options. They just have more rules. I'm not an options trader, right? So there's a lot of stuff that I don't really know about options. I just know that if you can call the market, and options have to do with you calling the market, I mean, you could do options too. I have friends that trade options. It's just never been something I've been wanted to get involved in. Maybe that'll change. I don't know, but I'm comfortable where I'm at. But yeah, the world needs more honest people in this industry. And again, once you guys get comfortable, once you get confident in yourself, if you feel that that's something you see yourself doing, maybe you can build something around that, like a community of your own, or just add to communities that you that you have respect for, and be an asset to those communities. Like eventually I'm going to hire educators, right? So I'm going to be helping people, really make this a reality for themselves. That's not happening now, obviously, but it's something I've talked to a lot of my students about. So that's also in the works, because I want to spread the impact at some point. It's kind of in planning stage, but maybe I'll do it, maybe I won't. It just really depends on how things play out, but and what I choose to want to do. But that's something that that could be in the works. For those of you that support this channel, if that's something that you wanted to do eventually, that may become an option available for you. But it doesn't matter what you try to do. This industry opens up a new world for you, and the goals that you have now are too small. And the more traders that can come out and prove that this is something that you can do, that not everyone is a scamming, lying piece of shit on the internet trying to take advantage of people. The more people that we can get that can help combat that, the better. And I mean, that's just kind of how I feel about it. Just remember that the industry needs more people that are honest, that are willing to teach those that may be a couple steps behind, because this is an industry like no other. And you don't have to be a day trader. This is the highest level. Think about it like this. It's the highest level of financial literacy anyone can ever dream of ever learning, because you're understanding the world markets, how that works, and how to be your own fund manager to manage your retirement. And so instead of you or anybody else having to get someone else to manage their funds, which they don't care about, you'll care about your money more than someone else will. It gives you the opportunity to not have to deal with that, and you can manage your own funds, both long term or short term. And it's just amazing what you can do with this industry, right? Swamptivity. So I actually have all the details in the link. I pretty much push you to go check that out. Check the link out in the description. All the details for what's included, how much it is, and all that. There's different tiers depending on what your requirement is. And eventually that community is going to be closed down. I'm just going to keep it. It's a very exclusive community. It's never going to get to thousands and thousands of people. I'm going to keep it tight, because at least until I get educators, if that's what I choose to do, which again, I don't know if I'm going to or not, hire more educators. I may just keep it really, really small. But the smaller it is, the more exclusive it is, the better I can be a teacher. I have videos and one-on-ones and all types of different stuff. So you can imagine if it was thousands of people, or just explosion like everybody tries to do when they don't even know what the hell they're talking about. You can imagine how the education quality, or the connection to the educator or the mentor, diminishes. And that's, I don't want that. I enjoy the relationships that I've built, that I will continue to build until I do decide to close it. But again, it's not going to be for everybody. I definitely encourage you guys that may be interested in joining that community. I want you to stick around here for maybe a month or so, get a feel for my teaching style, see if the way that I teach, the way that I do things resonates with you, and then make a decision. I don't want you to make an impulsive decision. Not that, maybe it would be impulsive, maybe it wouldn't. And maybe this call itself shows kind of my teaching style and whatnot. But I want you guys to do your due diligence, vet me, right? Put me to the test. Watch what I've done. Watch what I do, right? And see with evidence that I know what I'm talking about, and that it's worth listening or joining the apprentice, because it's an apprenticeship program. It's basically like this, but I go live every single day with my private group. Certain tiers get to have one-on-ones and private calls that are recorded, because everything's recorded for review later. But regardless, if you join the private group, you always get the live calls. But certain things are added depending on what your goals are. Because some people just want the live calls. They don't want one-on-ones. They don't want any extra videos. They just want to be there while I'm doing this type of stuff continuously. And that's all they want. Some people don't even want to be part of the private group that are, my students. They don't want to be part of it. They want to be anonymous. They want to be just with me. And that's just what they've decided to do. And I talk to them on a weekly basis, and have been for a couple years at this point. It's unfortunate because they're really, really spectacular. And I wish that they would be open to, to sharing their wisdom. But everyone's different. Everyone has their own goals and what they're comfortable with and what their objectives are. And, the door's open for whatever your goals are. I'm here to help, right? If you come to me and you invest in me as a mentor, I'm obligated to try to get you to succeed, or at least get to a point where you could then succeed on your own. Because I can never guarantee profitability. I can't guarantee that. Just like how any educator can't guarantee. But what we do here works. I prove it works. Many students, just off the YouTube channel and the things we do twice a week, have been able to see success with this. And so you can only imagine what every single day with me, and a community filled with people just like you that are thriving, what that could do for you, So, but regardless, you get value and the opportunity to really become something spectacular, regardless of what you're able to do, whether it's just support the channel here on YouTube for free and spend time with me here a couple times a week, or if you decide to take it to another level and be with me one-on-one and the private group, right? So regardless, there's value you can get from this, and I make sure of it. That's for sure. There'll be no wasting time here, right? So yeah. But yeah, so hopefully that makes sense, all this stuff with the currencies, and we'll kind of fly through the rest of this, because I know I've kind of held you guys for over the 2 hours that I like to keep you guys here. But it's all important stuff, I appreciate you guys sticking with me. So yeah. So if we look at the indices, again, we have dropped down. Let's go to the weekly chart. Again, I'm going to ask you the same question that I always ask. If you looked at this chart, and this was the 5-minute, what would you be thinking? Would you be thinking, oh, we're bearish now, the whole world's ending, we're going to target these lows? Is there enough evidence to prove that from this weekly chart? No. So this right here looks like it attempted to create an immediate rebalance. This completely blew out all of that. It didn't quite get to the previous week's low. And same thing with this as well. So all of them failed to get to the previous week's low. This one hit this. I believe that's a 2-week order block. I guess not. It's a 3-day order block. Definitely closed above it, so that's not indicating that we're overwhelmingly bearish. If we do open up and break down below that and close below it, that may look to seek a little bit deeper. We have this wick here. You can measure out the quadrants. We have the order block there. So those can end up being targets and reactive levels. If we do end up rejecting from this wick, breaking down below this order block, that could be something we look at if that was to unfold. Then we got a volume imbalance in here too. And again, the weekly chart here, the weekly high and weekly low, price is going to open up. And regardless of whether it's going to target this or continue to go higher, these two levels are going to have to be violated on the next couple weekly candles, or just simply the next weekly candle, if it's going to accelerate either to the buy side or the sell side. So this liquidity and this liquidity are the two most important liquidity going into this new week. So you got to determine which one is more likely to be targeted. And we're probably going to need Sunday and Monday to print in order to make that assumption. At least that's what I'm going to assume, because those 2 days are not generally the most dynamic. And Tuesday, Wednesday, Thursday, and then going into Friday for NFP, I mean, it's going to break out of this, right, at some point. Right, so we'll see. It's still bullish. It has kind of topped out a little bit here. So we'll see if that's going to be significant and result in a deeper decline, or if it's just going to hold in this, treat this high to that low as a balanced price range, which could be the case, and just continue. We could open up here, wick down below this, kind of fill in some of this that was left from last week, because we do have a fair value gap in here. Right, so that could be something that gets targeted. But yeah, essentially all I'm going to look at here or highlight is going to be the weekly high here and the weekly low. Okay, and then we got this previous week's high here and then the little gap in there. So when we open up, we have all this wick here from the previous week. All those different levels are going to have their own little quadrants. Okay, so they're going to be significant targets. Okay. And we'll kind of see how that behaves. Let me see. How does Friday's high and low do to assess the start of the week? So Friday's high and low, I was going to get to that. How does the Friday's high and low help assess the start of the weekly candle? So a good way to look at it, Friday's high and low, so what we just identified was the previous week's high and previous week's low. Once we get down to this daily chart, we can now see daily highs and lows, right? So Friday's high and low a lot of times can be used as opposing liquidity. Say if we're going to go lower, the candle can open. If we're going to have a bearish power 3 for the week, it may look to rally up above Friday's high, use that liquidity, maybe hit a PD array like this, use that as the counterparty liquidity and PD array to their down delivery, or vice versa. They may open up here, target Friday's low, sweep that low inside of a liquidity pool or PD array, aside from the Friday's liquidity, and then look to use that as manipulation liquidity, right, or the opposing liquidity for smart money buy positions if they're going to end up being bullish. So generally, that is how I look at Friday's high and low, the importance of it. It could be used as a target going into Sunday and Monday if it's left. Sometimes even Tuesday, right? Like say it opens up here and price starts to move down, and going into Tuesday, we're still inside this Friday's range, right? It could be used as liquidity on the opposing side of the move. Say if it goes lower, sweep this out, then goes higher, or the opposing view, right? Goes higher to go lower on a Tuesday or Monday or Sunday, right? One of those days it's going to be used. But going into the week, this is the previous week's high. This is the previous week's low. That's important on a weekly basis for the next weekly candle. On a daily perspective, on a daily candle, when we start the week, going into Sunday and Monday's trading, Friday's high and Friday's low are obviously the most near-term liquidity. That's inside of the weekly liquidity we just talked about within the weekly candle. So when it comes to price navigation, this is the importance of Friday's high and low. previous day's high and low, pretty much, previous week's high and low, and previous month high and low, as well, if it's in close proximity to where price is at, right? But when you're navigating time frame to time frame, this is for Friday's high and low. This is the importance of it, right? And again, if you're looking for price to go higher, when price opens up inside Friday's range, you should want to see if it's reasonable for Friday's low to be taken. You'd want to see that potentially be swept out to be the counterparty to your buy position. There has to be a winner and a loser. And when price goes down and raids a stop, like a sell stop, and then it chooses to run higher, that's literally what they're doing. They're tricking in and targeting liquidity where losers are at. In this case, the sell side is where the losers are at, to then go higher and pair up their smart money buy orders, to then try to target some external liquidity like this high. This is internal range liquidity. Any fair value gap, equilibrium point when price is rejecting like this, order block, a down wick at times, right? If this was reaching into a down wick like this is internal range liquidity, right? Unless it was to break outside of this low, because then that may change the overall structure, right? It may look to change it. And then if it blows this out, now lows become external range liquidity, and then highs will become internal range liquidity. But in this case, when we're going higher, the highs are external range. Anything inside is internal range, right? So a low here is internal range liquidity, right? Does that make sense? I hope that makes sense. I hope I answered your question, Fritz. But yeah, we always talk about Friday's high and low. That's part of the liquidity mapping list I have. So Swamptivity, you'll see that that's actually there as well. So you'll see a lot of the things I've mentioned in terms of certain liquidity pools and stuff like that. You'll see me talk about that literally every day that I'm live here, and every day that I'm in my private group, every week. We're always referring to these things, and it helps you navigate. So you're always knowing where you should be targeting, and what liquidity pools are important relative to where price is at, right? I have higher time frame liquidity pools and levels of importance separate from lower time frame levels of importance as well, in the liquidity mapping like little list I give, right? So yeah, definitely take a screenshot of it when you get it, or write it down, whatever you choose to do. And if you ever feel like you have nothing to study, you do have something to study. What I just said is a way to look into things and study. Power 3, each individual concept that you're learning, you could do a deep study on it. Until you become a master at it, you should be separating certain concepts, studying them individually, so then eventually you're able to piece the whole puzzle together and see how things work within each other, right? So yeah, hopefully that's helpful and makes sense, you guys. But yeah, so for now, I literally just see this as a rejection, right? Reversal. Going back to what I said about seasonality. See if I pull that up one more time. Right, going into the fourth quarter here, you see there's a high and then a retracement. Is that not perfectly identical to what you see here? High, retracement to rally. High, retracement to a PD array, discount, level that could potentially look to push price to the buy side. And that's agreeing with seasonality. And so we'll see if the other assets we talked about earlier can agree as well. And then just continue to jump on it. Do you look at big tech company earning report releases as possible red folder vol? So I don't look at them as red folder volatility. I do definitely look at them as a highly volatile time and price. I actually have over here in my private group the let me see. I have the let me see, where is it at? Earnings information. I definitely do keep my eyes on it because I'm long-term invested in a decent amount of companies. I manage multiple portfolios retirement account, stock accounts long-term, crypto accounts long-term, and then of course my day trading account and funded accounts. So constantly doing something, paying attention to everything. Generally earnings begin 1 or 2 weeks after the last month of every quarter. So December, March, June, September. Majority of the public company earnings pop off mid-January, April, July, and October. So yeah, we got earnings coming this month. Some heavy earnings reports. To be so honest, I used to use this, right? Earning Whispers. It's a paid service one of my students put me on a while back. But to be so honest, bro, what I've been doing recently, which I've mentioned a little bit recently as well, because it's something I've just started utilizing. I literally use ChatGPT, bro. I go on ChatGPT and I literally search up all the different things that I look into about stocks and how I evaluate a company. And I get all the information in seconds. It used to take me weeks to get all the information that I need. Literally, ChatGPT is amazing. It can literally analyze earnings and all the different intricate details about certain companies and answer every single possible question you have about what this means for the asset or company better than anything I have ever seen. And it's deadly accurate with all the different stuff, because I do my own research and I've done it for years and have my own little process that's led to very powerful results long term. And ChatGPT is like, I take that process and I put it in ChatGPT basically, and it's just absolutely mind-boggling. Like, it does 2 weeks worth of analysis on different companies together in 5 seconds. If you search up earnings explanation or any questions you have about the earnings or what you're trying to figure out about the earnings about a different company and what that means long-term projection wise and all these, anything you want to ask it about the earnings, you type in that specific question. Or even like the projections, right? Like your question right there, which sites do you use to follow the release dates and times? You can search that up in ChatGPT. When are the next earnings reports coming out, and what's to be expected and what has the history been for so-and-so company? And literally in 10 seconds, it pulls up the most amazing, detailed, helpful breakdown of like analysis of this stuff in literally 5 seconds, better than you've ever seen. Like, you have like a financial analyst that knows all about economics and everything right in your pocket. And mind you, I just started using this because I was skeptical to do it for this process, because I like manually doing it because I know where I'm getting the information. It even cites where it's getting the information. So then you can go and do your own research that way as well. It's like the most amazing assistant. I've grown more and more fond of ChatGPT and just AI tools over the last like 6 months than I ever was. Like, I didn't use it at all for a long time because I was like, I'm not really sure how effective it is. And this year has proven like this is the future. This is the way it's going to go. And it's so helpful. Like, lots of people are going to lose their jobs because of this. Like, it does the work of like either 2 weeks for one person or the work of like 5 different people at once in literally 10 seconds. And it's amazingly accurate with most of this stuff. You obviously want to make sure you do your due diligence and try to confirm things here and there. Like very important stuff. But I mean, man, it is. I highly recommend that you use this for this type of analysis. Don't use it for, certain things. Don't make it, or don't allow it to make decisions for you. Like, I'm going to buy a stock because of this. No, get the information and then make a decision. don't ask it, should I buy this or that? Like, because how the hell does it know? It doesn't have any money on the line. It's just an AI that does research and it scrapes the internet for all the information it can get to answer your question in the best way possible. That's literally what they do. So use it for that type of idea, right? Incorporate it in your analysis process and make it help you become more effective, more quick, especially if you got kids and a busy life. I mean, it is the most amazing blessing for someone that trades stocks or long-term invest in stocks and wants to know all about the financials and different things. I mean, it's an incredible thing. And that's a process that I go into great detail on in my private group too, for those of you that, for the students that want to know more about that aspect of things. There's so much involved in it. And most people that come to me are just looking for trading advice. So, or not trading advice. I'm not a trading or a financial advisor. Let me fix that real quick. I just give my opinion on things, and they come to me for ICT advice. Let's say that, right? And see me do it live and whatnot. So yeah. So hopefully that answered your question, brother. Any of you guys that want to look into long-term investing too, definitely use that. Use that tool because it's absolutely amazing. All right, so yeah, again, just to put a ribbon on everything, right? We're just going to look and see what price is going to do with this volume imbalance on the S&P, how we're going to keep responding to this wick here. Seems like it's going to hold. None of this tells us we're bearish unless it was to displace again and start to really rage towards this. If that's the case, then my attention goes to the volume imbalance. And we also have the wick here too, so that would be my target if we break down below this low and this low. Breaking down below this low or breaking down below the 50% of this wick could set the stage for us to take this out. We have to also obviously monitor what this is going to do. It seems like this is held. That's literally all price came down to reach into. And obviously the quadrants within the wick. So we'll see. We also have this wick. You can measure that out and drag it over. It may act as dynamic support. It may have already done so. So definitely look at PD arrays that align with the quadrants. Very important way to use this, right? If you have this daily wick or weekly wick and you're dropping down trying to take an execution on the lower time frame, look for PD arrays that are around that and look for your model to form around these levels too, right? If it does, it could supercharge the reaction because not only is it a wick and these are important levels within the quadrants, but they're higher time frame reference points that price is utilizing continuously, right? So yeah, keep that in mind. We got this order block here for the NASDAQ, so we'll see how it reacts there. We're kind of stuck between this delivery, the fair value gap, and this bearish order block here. So we should be able to slide on through that with little to no problems. So I'm going to assume that that's what's going to be the case. And again, the previous highs that are in close proximity to where price is at that seem reasonable to be targeted in the next couple days. Make sure you mark those, keep tabs on those as we move into this new week. On the Dow, we have an order block here. So that's going to be interesting to watch. So keep tabs on that. We also got a volume imbalance here we're going to keep tabs on. Got this large wick here. We got a lot of wicks in here too. So those levels may become important. Maybe you can measure this out if you want, just see how price reacts around those levels. Overall sentiment, just to make it very clean and simple to the point, I'm looking for price to want to favor going higher still. Everybody and their mama thinks that the market has now topped out. Seasonality, COT, bonds, yields, all those assets support this going higher. Right? We do see that the currencies are having a little bit of a confliction with that behavior. So we're in a moment where we got to be cautious, but we're going to stick to the higher time frame, especially when there's times where we got to be cautious. We're going to stick to what the higher time frame is still showing us. And even on this daily chart, it's still showing that bullish PD arrays are holding price. We have not broken down below any significant lows. I mean, you could say that this got taken out with the Dow, but now we've just changed the state of delivery again to the buy side and closed above an order block in all these different levels, right? And this, I believe that's an order block there too. Yeah, right here, this high. So yeah, and then now we got back above this one as well. So yeah, do you guys have any last minute questions? Thanks again for sticking with me. It's been a little bit longer of a session than normal, but you guys are awesome. Do you still think about adding? Yeah, actually, let's do that. Let's actually do that real quick. So yeah, commodities, there's no reason for us to ever at all for the next foreseeable future think that gold or silver are going to try to go lower. War and all this stuff, you're still going to be aiming for buy side. Even if it is a retracement, it's probably going to be so shallow, we're going to breach 4,000. I mean, there's projections if we go to World War III that gold is going to skyrocket to 10,000, right? I would not put it past them. We got countries buying gold and silver at unprecedented levels because of the fear, right? So it's kind of, any type of short ideas are going to be very, very short-lived. I want, just like I had this here, I wanted to see it drop into the fair value gap and then rally, right? But have I thought about it going lower and targeting this? No. We put that there just in case they wanted to do some manipulation for the start of the new quarter. But now this is completely off the table. This is completely off the table. Even this high is not even worth using, right? So we got a volume imbalance in there. Go to the 2 week. We could pull this up a little bit. So yeah, if it does look to go lower at all, which I don't necessarily see it doing too dramatically. I mean, this would be a pretty dramatic drop. I don't see it doing that. Maybe it does. It's gold because it could be kind of whipsawy and just kind of depends. If war stops and things calm down, that would tank gold. Potentially, right? Gold's at a level that, I mean, countries are starting to think like, oh, let's make gold our reserve or our back end reserve for our currency. US used to have it. That's when we were the richest nation on the planet. Once we got off of that, now look, we have $37 trillion of debt. A bunch of dumbasses spending all our money on stupid things and things we don't have any business being involved in. But that's neither here nor there. Hopefully we can get back to that. There's no possible way because I don't even think there's $37 trillion of gold that's been mined in history. Like the current gold supply, I don't even think there's that much gold on the planet, at least discovered yet. So that's unfortunate. We can't even say, oh, we're going to get all our dollars and make them backed up by gold to stabilize the currency. They can't even do that. They can't even do that at all. Like it's not even possible if we took all the gold supply in the entire world that's currently mined and took it from these other countries. We still wouldn't have enough to justify 37 trillion stupid dollars in debt. That's very unfortunate shit. And we're not the only country that's done this. China's done this. Like they're underwater too. Like some people say they're worse than us. I've heard some reports from some Chinese reporters that say the stuff that the CCP shares, it's not really accurate, right? It's worse than they say, but they also say that about the U.S. You know, they say that what's shown in the public is not even a fraction of what is actually owed. So it's like they're just making it somewhat reasonable, even though it's unreasonable. But the reality of it is far worse. I mean, I hope and pray that they're just like alarmists for all of our countries, because there's a lot of things like this for all the countries that have fiat currencies, and it seems like that's one of the reasons that they're pushing towards digital currencies, which is not necessarily something that we like to hear, because that means that something nasty is happening on the back end, and I really hope not. But who knows in this age, right? Who knows? I mean, man, I'm not even going to get into world things. It's too much to even... I'm not trying to talk about it right now. It's too much crap. But yeah, so with all the chaos happening, if it continues to happen, we're just going to continue to see this go higher. And as far as analysis, based on like certain liquidity pools that we can navigate, of course, the liquidity mapping always gives us a default liquidity that's important right now, both the higher time frame ones and the lower. We're just parabolic. So just like how ICT's been teaching or talking about trading at all-time highs recently, and how we've always talked about trading at all-time highs, you're not going to look to be short at all until it proves it. And if it does go short, you're looking at, PD arrays that are below us, close liquidity pools, wicks, the quadrants in the wicks, volume imbalances, new week opening gaps, all of those things, session highs and lows, daily highs and lows, weekly, monthly highs and lows, which monthly highs and lows are kind of irrelevant at this point, because it's just creating a bunch of one-sided buy-side delivery. But yeah, if it was to retrace, we got this low here that could be targeted. Maybe it sweeps that, hits this volume imbalance I outlined, and then just continues to rally. This is the current weekly candle, so the weekly low is here. So maybe the next candle opens up, targets that, sweeps this weekly low, which is right here. This is the previous week's low, and then uses that to be the counterparty to continued parabolic buy-side delivery. Right? So if I was trading gold, that would be my perspective. I'd be seeing what's going to happen. I'd think power 3. I would think, okay, I would like to see if price can give us a drop down, maybe sweep below this. If not, if it hits this order block and just continues to rage higher, I'm just going to keep seeking buy signals, targeting previous hour highs, session highs, whatever highs are formed that we retrace off of. That'll be my next target for buy side. Any PD arrays that are below us, that would be my area of potential interest to, watch price run from, preferably when a news event comes out of some kind. Keep your eyes very closely attached to what is happening with the wars across the world, because the more uncertainty, the more appreciation happens in gold. The more volatility in the world, the more volatility in gold. The less volatility in the world, the less volatility in gold and other commodities too. Right? Same thing with oil. If you're an oil trader, you got to pay attention to oil policy. You got to pay attention to this climate change stuff that's absolutely negative for the oil market. You got to pay attention to the inflows and outflows of exports of oil and many, many different things related to that specific commodity. The country's policies, wars, right? Wars impact this as well. So on and so forth. All of these assets in here that you see are being dramatically impacted by what's happening in the world. These are the only commodities that I look at. Sometimes I mix in like wheat, corn, silver, or wheat, corn, coffee, stuff like that. Coffee has been parabolic this year. Like, it's pretty insane. Meat, right? Cattle futures. It's parabolic. ICT a year ago, before, I think back in September, before things started completely just blowing up this year, at the start of the year with Trump being president, he said on Twitter Spaces that cattle's going to explode, coffee's going to explode, metals are going to go through the roof. He literally was like Houdini. He knows. Why? Why does he know? What wisdom can we take from that? Paying attention to the world and how it works. how these commodities are used, how they're manipulated because of world events. The supply and demand factor, right? If wars happen, supply of certain things may fall off. The policies towards oil and gas, right, in certain countries, depending on which country is talking about it, like the United States or Saudi Arabia or anything in the Middle East, wars in the Middle East, that'll dramatically impact certain commodities. If certain supply and demand factors are mentioned, like go on ChatGPT, you could do this type of research too and use it as an assistant to get you this information. And then you can kind of see that and then take the information that's said and take it to the chart, and then kind of study the reactions and whatnot. So if I was a commodity trader, which I'm not, but if I was, say NASDAQ and S&P and everything else just went away, and I was forced to trade commodities, there'd be no problem. We would just do the same stuff that we do, right? Just add on some of these extra factors like supply and demand. We'd have to pay attention to that, the global supply and demand relative to the country you're in. And then, of course, everything else is pretty much the same. Kill zones, macros, bias and narrative, validation, invalidation, all these different, everything else is the same. But that's in the liquidity pools that we target. That's how I would end up trading this. But yeah, thank you for reminding me, by the way, Tony. I would have overlooked it. But yeah, so in a nutshell, this is pretty much what we're looking for the gold and silver potential price behavior. I think it's just going to continue to be parabolic. All right, so yeah, we'll see how that unfolds. And because we're at all-time highs, the most important highs and lows are going to be the current highs and lows, and then of course any highs and lows that form the highs above, right? Those are going to be targeted again because we're continuously running higher, and then any of the lows down there. I think that if we go to the monthly, I think this is all-time highs for gold. Silver, you have some other stuff you can go off of. If you did trade silver, you can go. I think you can go off of some things in silver, if I'm not mistaken. Damn, we're almost to all-time highs in silver too. Holy crap. Yeah, well, seeing this type of stuff, it tells you that the world is in chaos. It's scary to see this stuff doing this. It honestly is. The market tells you things before it's going to happen. For the most part, So we just got to keep praying, you know what I mean? Pray that cooler heads prevail. The plans of evil men get thwarted. Innocent people stop dying. Nations that have influence, figure out how to make everything calm down for everyone's sake. Terrorists stop doing what they're doing, all these other freaking things that keep happening. Hopefully terror slows down, peace can prevail, people can get along, and everybody can just go back to being peaceful, or at least relatively peaceful. Because war is not good for anybody. It's just a waste of life, money, resources. People should be able to talk things out. Tony said no problem. Question. With Apex, do you agree they are good? I don't endorse any of them. Maybe I will eventually. I'm not sure. I just switched to Apex. I'm only taking like one trade a month with Top Step. I'm just not willing to use their nonsense rules, and I can't add to it. So I only have that one account. So it's like, all right, I already trade my personal account more than I trade funded accounts. So I've been focused there more or less, and also with my Apex account, I'm trying to go for 5 Apex accounts at once. With Apex, do you agree? Yeah, I totally agree. They're a good prop firm for sure. And you can stack up a lot of accounts. They're very trader friendly. I've talked about the difference. What I want you to do, Tony, I want you to go into ChatGPT. I want you to search up what I searched up. Basically, ask it, which out of these three prop firms is the most trader friendly long term? And search it into ChatGPT with the comparison between Top Step, Apex, and My Funded Futures. And I want you to see the details it tells you, right? And you'll see why I'm making a decision and encouraging you guys to also make the decision with to basically not even concern yourself with Top Step. They are absolutely uncompetitive at this point with certain things that they have implemented. Both the fact that you have to trade their platform, which is trash. Okay, I have friends that still are with Top Step and they hate it because of the fact that they've now been forced to use the platform that they created that has bugs and goes down every week. And I mean, there's some cool things about it, but it's like, I don't know. The rules are just not trader friendly compared to Apex when you can have freedom, more freedom. Obviously, they got rules, but the freedom with withdraw, Top Step is not withdraw friendly whatsoever. And I'll let ChatGPT break that down to you guys why and give you all the intricate details. I was just mind blowing, honestly. I didn't know. I didn't know anything about a lot of it because I was just comfortable trading Top Step for a long time, and I didn't realize. I didn't make big withdrawals with Top Step. I just used it as cash flow for bills here and there. I used most of my main income and withdrawal capacity through my personal account, which I've grown for the last 6 years. Yeah. Oh, yeah. That's another one of those. That's another one of the reasons. They now force you to pay $135 once you move up to a funded account. They force you to pay $135 when you can come to TradingView and pay $7 for the same data. So you're not having a bunch of shit that you don't use, and you're paying them. So you're basically coming out of pocket to pay more than you should have to. You have way more rules. You can't withdraw as much as you would like, right? They make it so, like, specifically to new traders, right? You might as well not, because, I mean, you're going to be excited when you're trying to get a withdrawal. And then you're going to make a withdrawal, say you make $1,000 and you're with an express funded account. And you think you have a $3,000 buffer. I talked about this before, right? And then, so if you have a $1,000 amount of profits and you're excited to take that first withdrawal, you can only withdraw half, which I don't see nothing wrong with that. But once you withdraw half on that first time, the first time you withdraw half, if you're not even thinking about, let me make 10,000 before I withdraw. Why would you do that? If you have money in the account, it's a fake account. It's a demo. It's on a prop firm that if they go under, your money's going to be gone. I learned that lesson the hard way through FTMO. I had a $60,000 withdrawal waiting to go through FTMO because I did what I had to do to get it to that point. And the regulations came in from the US that banned US traders, or FTMO banned US traders because of regulation. And now they brought it back, obviously. And they said that they won't give me my fucking account back. So yeah, I'm never going to deal with them ever again. This was like multiple years ago, by the way. But I had a $60,000 withdrawal and they banned me because regulations in the US made it so they, I guess, got ahead of it. And they just removed me. And my money was there. So I say that to say, why would you not withdraw the money right when you make it? If you make $1,000, why not take half of it out? Why? Why would you not want to do that? Why should that be punished? Right? And the way that they punish and try to promote you to keep the money in the account and grow it to be like a crazy amount, the way that they punish it is if you make that withdrawal of $500 with your $1,000 profit, the $3,000 buffer that you think you had or that you did have up until that withdrawal took place disappears. And now you only have $500, the money that's left in your account, to now work with as your maximum risk. This rule is not like in your face. So many new traders, I can imagine, it probably screws them up, right? And it took me by surprise. I had Top Step for a while. I never had to deal with it because I wasn't concerned about withdrawing super early, right? Until recently, right? I got it and I withdrew, and I was just wanted to do the first withdrawal, right? It was the first withdrawal of the account, the new account that I got, right on top of the main one that I have. And I didn't realize that rule because I never withdrew super early on my other account. And I was like, what the fuck, dude? Like, that is an insane... Like, I'm not going to push my students to go mess with them if that's what they're going to be doing. Because I don't encourage you to grow the account. Just like ICT has said, don't grow the account. Literally just get the money and withdraw every time you get the chance to. They discourage that. I don't know if it's a new thing. It never was like... I didn't see that rule when I first got my first funded account a year and a half ago with them. I never had to face that, right? And so recently I've had to slowly increase it. I'm back to $1,200 again because I've just had to do one contract, right? A micro, 2 micros, and luckily I know how to trade, so it doesn't matter. Right, I'm not even tripping off of it, but I'm more concerned about my students. That's why I'm like, no, you might as well just go to Apex. They're a lot more trader friendly. You can make a withdrawal and it doesn't totally wipe your whole account out. Okay, they're not gonna do some scandalous nonsense. They do have their rules and whatnot, right? But they're just better. You can get more funded accounts if you want to go that route. Stack the accounts like you see a lot of these popular traders do, to get the most out of it. So. That's something that's available. My funded futures and Apex, those are the 2 that I can vouch for. Obviously, all brokers and all services will have their problems. That's not a guarantee that you won't have a bad experience, but at the same time, if that's the route you want to go to, that's, in my opinion, the best route from what I've experienced, right? And I have friends that trade my funded futures, and they have nothing but good things to say about it. I've never traded with them. I have an account with them, like a account ready to buy a funded account, but I never pulled the trigger on it. I'm just going to stick with Apex. Right? So, yeah. With that being said, I've kind of kept you guys longer than I wanted to, but thank you guys for sticking with me and listening to some of this stuff. Hopefully you guys got value from today. Hopefully you understood all the things that we talked about. Again, we're going to just be looking to see if we can get this to go higher. Yields, we'll see it. We're going to watch how this is going to respect this, or the bonds. We're going to see how it respects this fair value gap, this balanced price range, and the order block. We'll see if we can get displacement above this high. If not, if it closes below this, it looks like it wants to really start to smash through this and overlap this fair value gap. We'll target the sell side in that case. And then we'll see how that affects the overall market as a whole. But if not, if it doesn't do that, I'm expecting this to hit this and displace above here at some point and respect these levels for further buy side, which supports buy side indices for the most part, and bearish dollar. This here, if it's going to be supporting that relationship, this is going to have to reject here and start purging out these equal lows here from this fair value gap. This balanced price range should be able to hold price. We should also end up closing below this quarterly bullish order block and the middle portion of this balanced price range, and hopefully it can respect this as well to further confirm that, maybe even end up seeking these equal lows over here. All right, and current the DXY, we're gonna see how price is going to react inside this. We have the daily fair value gap. We're going to see if it can reject from this. Try to close in some of these levels. We're going to study how it reacts from this high here. Is this going to turn into a bullish breaker? We're going to have to find out. This was a type 2 dealing range. So we'll see if it's going to hold in that and then maybe look to seek some of these upper buy side targets. And then when it looks to displace further to the downside again and starts to maybe overlap something like this, get back down below it, that's when I'll start to consider this overwhelmingly being bearish again, preferably us breaking down below this level and getting somewhere down here. That sets the stage for us to blow this out. Targeting this low, I do believe will end up being high resistance because we took the low here instead of leaving it. If it would have left it and did this and then started to come back down to it, it would more than likely be a low resistance liquidity run. When it purges liquidity out like this, sometimes it makes it a hard ask for it to get down there quickly. It may still get down there, but it will do it in a fashion that is high resistance. This, like this, for example, right? If we're going to continue, right, say it opens up, drops down, hits this fair value gap, it looks like it wants to continue going higher, this will be a low resistance liquidity run because there's a high here, it left the high. These are relative equal highs. That's unfinished business. Relative equal highs as well. And then, of course, we have the PD arrays in here that could support that. Right? So we'll see how price wants to behave within that. I'm going to assume that it's going to try to do that. So that's what my opinion is going into the week, and then we'll see how it behaves as it gets up there above those highs. For the currencies, like I said earlier, we're in between this order block, right? Equilibrium from this high to that low. Buy side is still favored overall until we were to break down and commit a little bit more. We do have SMT that's kind of showing us a possible early sign of that. And then we got the overlapping candles in here, which could be a problem. That makes us feel that we may be in high resistance delivery. Zooming in, we can see that that has absolutely been the case. Been, sell side, buy side, back to sell side, hanging around equilibrium, trapped between these two order blocks on the weekly, bearish and bullish. So closing below this low, breaking down below this 50% of this order block here puts us in position to then target this monthly fair value gap and these relative equal lows. Okay, but if it holds this level and then aggressively reprices above this wick and all the quadrants up there, that sets a stage for us to use this as an inversion to go higher, or a reclaimed fair value gap to then go higher. But again, breaking down below this low gets us below this fair value gap. And again, that's another reason why it would set the stage for us to get down there to the sell side. And then this wick too could act as a balanced price range if it was to close back down below that as well. Okay, so that is my opinion. We're going to have to wait and see what this is going to do. Otherwise, if it's not going to go lower, like I said, we'll continue to try to see if we could push for buy side. But we're in a phase of time where, it could kind of go either way, right? Could target this. Just because it targets this low here, does that mean it'll be completely done going higher? Maybe not, depending on what DXY does, what the bonds and yields decide to do. But breaking these levels puts us in position to target this. Breaking up above this would get us to go up here. I'd prefer, my preference, right? We got the contingency to go lower. My preference would be for us to get up above this and see if we can't target out these equal highs up here. And then kind of disrespect this, assuming that DXY was to top off and then turn around and go bearish. If DXY goes bullish, again, that's going to really support this, trying to target these equal lows. So if this fails up here and doesn't allow for buy side to continue, we have our contingency levels that if they're triggered, we'll be able to easily switch and target this in terms of being flexible and going from one to the next. But yeah, I'm going to try to see if we can still support this because it's holding and we are still bullish. It has shifted market structure here, so that may lead to another early sign along with the SMT that we're going to drop. But I don't want to entirely disregard the idea of bullishness simply because, when we go to the upper time frames, it doesn't look like it's overwhelmingly changed. It just looks like it's accumulating at these highs. It's also inside the order block, so it has some life to continue going in the direction the buy side's been pushing. And also has 3 PD arrays been violated here as we move up in time frames? Not necessarily, right? I mean, there could be an argument that it's triggered the 3 PD array rule by breaking this low and breaking down into here, leaving these equal lows. It's, getting below this and closing below this and this wick and closing below this order block 50%, that gives me full confidence that we'll blow down below this. But since we're reacting the way we are, we have to wait and see how it's going to treat this, because it may still give it life to come up and target this. And if it does get up there, this will be probably a low resistance liquidity run because of the failure swing. this would be a high resistance run if it was to try to go up there. Okay. For the, what is that, for Euro. It's going to be a great week and a great start to the fourth quarter. Absolutely. Got to manifest it, Tony. I love the positive energy. Absolutely. God got our back. Okay. He's with us every moment of every single day, in every scenario. And every time you look at the chart, he's there trying to help you make good decisions. You just got to get out the way and let the wisdom manifest, you know, and be in a good state of mind, be positive. Don't think that the market's against you. Don't think negative things. And, you know, I'm sure his grace will bless each and every one of you. Right. Right. And as long as you stay disciplined and use the tools that he's placed in front of you, you know, just do what you've been taught, do what you know you're supposed to do. Don't be reckless. Everything will be good. You know, we'll have a good rest of the year. And then again, last but not least, this looks like it's just a simple retracement. We got the fair value gap in here. It just simply looks like it came down, stopped here. It, you know, it's going to have to break down below this low and close below this wick midpoint for me to really think that we are done with buy side in the indices, right? So otherwise, it looks like we're just going to continue to try to seek the high. But yeah, we'll see. Again, we're just like how we are stuck in between two higher time frame PD arrays in the foreign currencies. We're stuck between two PD arrays here as well. Bearish order block, daily bullish fair value gap. Right inside of the range from this low to that high, pretty much at equilibrium. So we're at a premium. If it's going to short, the short will start somewhere in this area, and we should be able to respect this. And then it should displace and start to show no respect to any of this. I can say if that is what happens and we do target this low, this is going to be blasted through. It's not going to slowly get there. We got the failure swing also to justify, and then we also have this as a failure swing too. So that is beautiful liquidity to be targeted. And if this low is violated, lows will then become external range liquidity, and internal range liquidity will be found inside the range when price retraces up to go lower. For now, internal range is what we're working with in here. External range is these equal highs. We do have these equal highs up here, like I mentioned earlier. So those could very easily be looked at as a target if we were to blow through some of this and support this level and this overall price swing here to go higher. Okay. So yeah. With that being said, you see how fast we could do these analysis on these assets. The calls we have on these weekend calls are long because I try to get every single little detail and answer questions and all that. But with the skill set I try to provide to you, the things that I teach you, this is how fast you could be able to do it. We did that in less than 15 minutes. We talked about every single asset and what they should do. Literally, maybe less than 10 minutes. Like that was quick, right? It doesn't have to be complicated or long, I should say. Some of these concepts require extra detail for those that may not be experienced with them. So that's why it sometimes takes a little bit longer, right? But this is where you'll end up being eventually, right? Some of you guys are already there. You do this stuff yourself. So good job. But yeah. So hopefully everything makes sense. If you guys have any questions, let me know. God bless you guys. Appreciate you for hopping on. Don't forget to praise God today. It's his day, Sunday. And yeah, with that being said, hope you guys have a good rest of your day. Enjoy your weekend. We'll be back live in my private group tomorrow morning at 5 o'clock. And for those of you here in the YouTube family, I will see you guys on Tuesday. Tuesday at 6 o'clock. All right, 6 a.m. Pacific Standard Time. All right, so yeah, that being said, take care, you guys, and I will talk to you all then.